Good morning. Good morning, colleagues, our valued stakeholders within the industry. Thank you for joining us this morning. Just as a brief introduction, I go by the name of Lebogang Kutumela. I work for the CIDB, and I'll be your program director for today. Just without any delays, let's please get the program going. Today we've got an agenda in front of you. And then just as a slight change to item number 3, what you have on paper there, we were supposed to have our CIDB board chairperson, Mr. Khulile Nzo. He will not be joining us, but we do have another board member who will be doing the opening welcome and purpose of today's session for us. And let's welcome him on stage, Mr. Sbusiso Makanya. Thank you.
Good morning, everyone. Good morning. My name is Sbusiso Makanya, as it has been indicated. Thank you. Sorry about that. Most certainly, I'm not Mr. Nzo. The size would have actually the size obviously would have actually determined that. And again, Mr. Nzo, maybe we need to clarify this. Mr. Nzo is still the chairperson of the board. So there is no coup, there is no acting. I'm just another member, and I happen to be the chairperson of the Stakeholder and Social and Ethics Committee. So both of us were meant to be here. Then unfortunately it's been called, it's not been recalled, he has been called to represent CIDB in Cape Town by the minister. So that's the reason why I'm here. So you never know these things. These days, if you see a new face, you need to explain that the old face is still there. So it's a pleasure. Well, maybe let me start by apologizing for a little bit of a late start. We really value your time, so we were just dealing with some of the logistics, including the sounds, and as well trying to make sure that we accommodated the colleagues that were a little bit late, so we must apologize for that, especially to the colleagues that came in early. It is a pleasure to host you on this Gauteng breakfast session, an opportunity to connect, reflect, and engage meaningfully on state of our industry. The work that we do is shaped not only by our effort on the ground, but also by a mandate we've been given. As you may be aware of Section 5 of the CIDB Act, which clearly states this: to promote sustainable growth of construction industry and participation of emerging sector therein, the board may monitor economic activity within the construction industry and measure according to which public sector spend is scheduled. I would like to emphasize that this is not this is more than just a legislative clause. It is a guiding principle for CIDB as ongoing effort to track how the sector evolves, where opportunity lie, and what obstacle we need to tackle head on. Through the construction monitors, we regularly gather and share insight on key themes. I was quite excited as a board member that is not here most of the time when I was introduced to some of the stakeholders by our staff. It was quite exciting to see that at least you have a relationship with the stakeholder, which is very important. Amongst some of the things that we meant to be discussing in this session that I've actually highlighted, it's a transformation and participation, supply and demand patterns, which is very important, contractor development, employment trend within our industry. These are not just that, they are signposts for policy development and service delivery improvement. In fact, the reason why the policy need to be amended, it must be informed by some of these things, because when we develop policies, we develop them as making certain assumptions. As we implement them, the reality is stuck, and as well, that's why we're supposed to have the ongoing reviews. And today, we are looking forward to share some of these findings with you. Colleagues have prepared a tailor-made report that highlight provincial trend, pipeline shift, especially in Gauteng, and we're hoping they spark conversation and collaboration. I forgot to mention that I come from KwaZulu-Natal. I think I've mentioned that to some of the stakeholders. I'm very familiar with stakeholders back, I'm not gonna say back home, because even here is home, back there, in KwaZulu-Natal. That's why I might not be familiar with some of the faces here. We will be engaging with most of the provinces, particularly the big provinces like yourself, and as well, of course, KwaZulu-Natal, we must mention amongst the big provinces. Now, while there is a progress to celebrate, in these days a progress to celebrate, we also must be frank about the hurdles. There are challenges. We're not going to run away from that. Gauteng has made stride in infrastructure planning, but client performance, particularly on the issues of budget underspending, remain a pressing concern. When budgets are left on the table, it leads to delay in rolling out critical projects. Fewer jobs are created, especially in high-impact sectors like ourselves. Missed transformation opportunities, because when the project is not complete or when it does not start, of course, there are other underlying factors that are impacted, like the transformation goals and all of that, particularly to the emerging contractors. And as well, which is also important, the dented public confidence in our sector capacity to deliver. If we are unable to spend the budget, it gives the impression that we don't have capacity. Underspending is not just a missed financial target. It's a missed developmental moment. It's a sign that we must do better when it comes to packaging project, managing timelines, and supporting procurement readiness. There are also issues of insufficient demand. Many contractors are eager to contribute, but they don't always know when and where opportunity will surface. In response, the CIDB continued to support clients' department through workshops and technical sessions. But to truly shift the dial, we need more systematic action, which among others include better planning and monitoring frameworks, faster payment, particularly of SMEs that rely on proper cash flows, stronger accountability, and transparency around infrastructure spend. My experience has been more on the side of the client. That's what I've done over the past 3 decades. I've been representing, I've been leading from that side. Some of these challenges, one has first-hand experience on as part of the causes of these funds that they remain unspent. Amongst those, as it's clearly highlighted here, it's an issue of poor planning. One of the examples, I was a deputy city manager up until the end of last year at eThekwini, responsible for water, electricity, solid waste. One of the issues when I joined eThekwini that I observed, which caused them not to spend a lot of their budget, was that in terms of the policies, internal policies, you're not allowed to go to bid spec before the budget is approved. which is very strange. Because when the budget is approved, we are supposed to implement and not to start with the processes. In fact, one of the things that we then introduced, we highlighted to colleagues that when the budget is approved, you approve the 3-year budget, not the 1-year budget. So there is no reason why we don't start with the planning. Amongst part of the planning, the issue of bid spec. Yes, I understand the bid adjudication, you must make sure that there is budget. So there, you can actually start the process and probably maybe stop at the evaluation before you you trigger AG in terms of projects that are not on the budget but that are implemented on the ground. We understand that part, but we also need to make sure that we are enabled to plan well in advance. As a technical person, I know that the project, to identify the project, plan it and implement it, it's not a 1 month or a 1 week thing. It's something that needs to be done over the period of time. And of course, it's our responsibility. I don't see the CFO. I know that we normally fight with the CFOs to make them to understand the practicality of implementing project, that it's rather impossible to implement a big project in the same financial year and plan it in the same financial year. You need to have proper planning, master plan, cash flows over the longer period. Once the budget is implemented, once the budget is approved, you start the actual implementation, not the processes. But obviously, as I've indicated, I'm the technical person, I think technically, but people, most of the time, that some of us that are technical, that believe that control that aspect is normally the finance people that might not be well versed with the actual technical work and what it entails. But it's our job to educate each other. We hope today's session will create space to reflect on these realities. Let's tap into insight we've gathered, explore practical solution, and strengthen collaboration between public and private stakeholders. One of the important things, probably, which is one of the things that I believe that is one of the biggest milestone during our term, is to start now focusing on private sector. The focus has always been on public sector, while the private sector continue not to respect the grading. They continue to use their friends that are not even graded. Those are some of the areas that we've started the process. We hope the next board will take it from there, because private sector need to be monitored as we're trying to monitor the public sector. Because at the end of the day, sustainable growth in construction isn't just about brick and construction, it's about partnership, trust, and shared purposes. I normally say this. I was representing the chairperson yesterday of, I'm the deputy chair of the Catchment Management Agency back in the province of KwaZulu-Natal. I'm not reading too much about this thing of representing chairperson. I'm not chairpersons. I'm not reading anything from there. It just happened by coincidence. I said when I was addressing the farmers, I said, if you look at our industry, be it construction, be it water industry, or be it electricity industry, there are a lot of challenges. As individual, you might have not contributed negatively towards the state of it, but collectively we've messed it up, so it's our responsibility to come together and fix it. You might have not contributed on it, or probably sometimes you might contributed it not intentionally trying to address other issues, but the reality is that we have a responsibility to hand over this industry to the next generation in a better state that we found it in. It is such engagement that will assist us to bridge those gaps, to learn from our own experience, our own mistake, and as well to learn from the international organizations that have gone through this a number of times. I think over the past 20 years, or over the past almost 30 years, we've learned a couple of things, and there are one or two mistakes. There are good things that we've done over the past years. I mean, I was fortunate to have started my career prior to 1994, and I know what of a mess it was. In fact, we used to appoint contractors and consultants in particular that have no capacity because there were no mechanism that were objectively looking into that. We've tried to put some mechanisms. There are mistakes here and there that need to be improved, hence the reason for such engagement to try and mend those gaps. Thank you once again for joining us, and we're looking forward to a productive and frank discussion with you. Thank you.
Thank you very much, Mr. Makanya, for that detailed welcome and outline of the purpose of the session. As he has said, this is one of many other envisaged sessions which the CIDB is planning to roll out across the country. And we are very excited as the CIDB because in our current strategy, the 2025-2030 strategy that is aligned to the current MTDP period, we are envisaging that we want to be a repository or knowledge hub for the industry. I think in our recent engagements with Parliament, the PPC as well as the Select Committee on DPWI, we were told as CIDB to say we should not just focus on being a regulator of the industry, but also extend to being an enabler of the industry. And I think where we are coming from today, we are saying that for us to enable the industries to thrive and to be a contributor to the economic development landscape of this country, we also want to make sure that there is sufficient information that we are putting out there, not only for government, but for broader industry stakeholders as well, to allow us to make more informed policy developments, more informed decisions about where the country is ought to be going. And as we look further into the agenda, colleagues, we are so excited that we truly as CIDB take into a serious landscape our commitment to not only work by ourselves, but also with our key strategic partners and our stakeholders as well in building the industry. This is why when you look at the agenda, we are not just sharing information that is produced by CIDB, but our few strategic partners as well. And then the first two presentations will be information that we are gathering in partnership with our strategic partners. And we are very excited to be building into an era where we are saying we want to hold hands together into building the industry. So with that in mind, we are going to have the first two presentations. They are going to be external colleagues and partners that are going to be giving us insightful information about the state of the industry, looking at global macroeconomic environment as well as inwardly looking at Gauteng. So without any further delay, let's welcome our first speaker. I don't think he needs introduction in the industry, Mr. Craig Lemboe from the Bureau of Economic Research at the Stellenbosch University. Thank you.
Thank you so much for that introduction. Good morning, everybody. Good morning to the board members. Good morning to CIDB CEO. These breakfast sessions these days always make me very nervous because you sort of prepare your slides and you prepare your thoughts well in advance, and then something happens in the US with a certain American president, and when you wake up, your entire story sort of shifts on its head. So last night, I was very close to the Lord, asking that let there be no major adjustments that require me to change my thought around the presentation, because I'm also tasked with just coloring in some of the industry data with what's happening on the macroeconomic front, because we can't divorce what happens in the sector from the broader South African economy, and you can't divorce the South African economic performance from what we're seeing on a global perspective. So I'm touching on a number of facets very briefly, hoping to focus a little bit more on the 2025 Q2 CIDB SME Business Conditions Survey results. So without further ado, what we're seeing on the global economy, or what we've seen in the global economy since the start of the year, has been a significant change in the view around economic performance. And I've, maybe we can just wait for the graph to show. Okay. So as long as we get some of the slides up for the latter section. So what we've seen is a major shift in the thinking around where economic growth is going to be moving or heading towards in the international economic space. And it's been such a significant shift that if you look at what international forecasters had predicted, even at the start of the year versus now, they've downwardly revised growth substantially. So the World Bank, for example, in their June view of the global economic growth at around 2.5% for this year. So this is overall global output. And if one looks at the long-term history, you'd see that outside of major disruptions, so the great financial crisis, the COVID-19 pandemic and the related economic shutdowns, this year is poised to be the worst performing year since the great financial crisis. And that's quite a significant turnaround from growth that was expected to be more or less stable when they ran these numbers in January. And a large part of the shift is because, as I mentioned, what's been happening in the US and the uncertainty of what's been happening in the US. Now, I've got a slide that you'll see on your packs later on, I suppose, that just shows you how busy the US administration has been in terms of these so-called executive orders, where the United States President signs a document and things get kicked off. And it's not just on tariffs, but there's been a broad range of interventions around foreign aid. There's been interventions around, skip to the next one, around foreign aid. There's been interventions around immigration. There's been interventions around diversification, equity and inclusion. There's been interventions around universities. So it's been a broad range of interventions. And many of these have been challenged, either by the courts or by markets. And so that is what's been driving uncertainty. It's whether or not we're going to end up in the sort of high tariff environment, or whether or not somewhere in between we're going to find a sort of middle ground. And it's that uncertainty that has really weighed on key aspects of the economy around fixed investment and around employment. Take South Africa, for example. So we, on Liberation Day in April, announced that we were going to get 30% tariffs on all goods coming in from South Africa. And there's been negotiations. We visited the White House. We took our delegation. We took our golfers. We took quite a number of people to sort of spur on relations. And still, we ended up with 30% tariffs. And the rhetoric or the discussion now is, let's not be overly hasty. We feel that there's still an opportunity to negotiate before the deadline of implementation, which is 1 August. And there have been many countries that have successfully negotiated down these tariffs, and that is where the uncertainty rests. We know we're going to sit with a higher tariff environment in the US, and that's got very significant implications for the US economy, more specifically than us, and of course the global economy. But we don't know to what extent. We don't know where this is going to land, and we don't know if that's going to shift after 1 August. And the US administration decides, but well, you're still doing very, very, very bad things in South Africa. So from 1 October, tariffs are going to adjust even higher. And it's that sort of uncertainty that makes planning difficult. We've had many anecdotes of firms in South Africa already losing orders in the US because all of a sudden, goods are too expensive from South Africa because of the implementation of even this 10% tariff that we're sitting with. So within this uncertain environment, it's hard to see, and I'm trying to bring it back to the South African economy, it's hard to see how the international economic environment is going to be conducive to economic growth domestically. We've always relied on higher commodity prices. We've always relied on exports to really spur on an economic boom in South Africa, and now we're pretty certain that that's not going to be the environment that we sit in this year and into next year for a number of these reasons pertaining to uncertainty. If you look at the South African economy more generally, and if you zoom on to some of the latest data, outside of the weakness on the global perspective, our economy also remains pretty weak. In fact, the outcome for last year, one would argue, was actually pretty bleak. Now, we had a bad performance in 2023, And a lot of commentators said, well, it's load shedding. It's this intense load shedding. It shaved about 2 percentage points of our GDP, was the research done by the South African Reserve Bank. I see them also meeting further down the road, so maybe their ears are itching because I'm mentioning them. But a large part of the weakness in economic growth over the past 3 or 4 years has been pinned onto load shedding. But when we came to the 2024 number, it was even worse than what we saw in 2023. And we sort of saw an end to load shedding to the extent that we had it around March of last year. So there are a number of other factors that are playing on the performance of the South African economy, and in fact, a number of other constraints that are weighing on performance outside of just load shedding. There's logistical issues, our ports and our roads. There are water issues, and I have to say this tongue-in-cheek, not so much in the Western Cape, but there are water issues nationally. And the interesting thing is that to resolve this requires the direct hand of the construction sector. You cannot embark on structural reform initiatives and upgrade our roads, and upgrade our ports, and upgrade our energy infrastructure if you don't have the construction sector that's acutely involved in these developments. But we've not really seen that come into play, despite all the discussions around how Operation Vulundlela, which is sort of the flagship state reform program, how it's progressing and the milestones that it's reached. Despite all that, we are not yet seeing it in the numbers from a construction sector perspective around these reforms. And we do think that when we look toward economic growth for this year, for example, it is still going to be a highly constrained environment. My team at the BR, they're sitting now, meeting to discuss the economic forecast for this year and next year, and our view is growth of only 0.8%. So we complained that load shedding led to 0.7% growth in 2023, but we've not really seen, in the absence of load shedding, any substantial momentum coming from growth. Where we are seeing some green shoots is in consumer spending. So inflation is down. We expect a further 25 basis point increase or cut in the interest rate at the end of this month. People are withdrawing from their retirement savings because the two-pot system now allows them to. And generally, consumer confidence is better or rising. So there are some green shoots and there are some reasons to be optimistic, where we are a little bit more pessimistic as bearing on the lack of reform momentum and the lack of movement in the construction sector in particular, and that is around fixed investment. So it's around building things, whether it be machines, whether it be cars, whether it be building, whether it be infrastructure. That is where we're really seeing the weakness coming through this year alongside the fiscus. So our view is that while consumers are going to do well, you're still going to do relatively well. Investment and government finances are going to be under strain for a number of very particular macroeconomic reasons. And on top of that, there's a sort of broad risk that's sort of become a feature of the South African economy. The international risk raised by tariffs, the international risks raised by global warfare. Over the period, over the 2 weeks where Israel invaded Iran and the US got involved, the oil price went from around about $65, $66 to almost $80 per barrel, and then fell back to $67 per barrel once there was some sort of peace that was found. That is the volatile world that we're working on. And if you had to do a forecast at the time when the dollar was, or the oil price was at 80, you'd sort of see a very significant increase in inflation, a reduction in the sort of consumer spending patterns that we predict currently. So this volatile world, this uncertain world really does add to the risks that we're seeing on the global perspective. And then domestically, a number of key risks remain in terms of the economic outlook. But I think what is of critical concern, are we back? So this is, just to take you 2 steps back, that's just to show you the graph on your left-hand side, just to show you how busy this current US administration has been in the first 100 years in office. That sort of number of executive orders is almost off the charts, even compared to his previous term. And that resultant uncertainty on the right-hand side graph just depicts why global investors, global business is hesitant to really make big moves. You don't want to build a factory in South Africa to produce vehicles, because vehicles are going to the US, and the US is a 30% tariff, or not. And this is, so this hiatus in and of itself is causing economic weakness globally, but also in South Africa. To just move on to the slide that I was focusing on at the time, and this is around the sort of premium built into South Africa because of domestic politics. Now, I've included two graphs on this slide, on the previous slide. The one on the left-hand side is our RNBB, our Business Confidence Index. We measure business sentiment across around 6 or 7 sectors in South Africa. We ask respondents simply, are you satisfied with prevailing business conditions? And if you say yes, you become part of the index. So typically this index can range between 0, where everybody is dissatisfied, and we were close to 0 during the COVID-19 pandemic, and 100, where everyone is satisfied with prevailing business conditions. And the latest reading sees sentiment at around 40, 41, 40, I can't remember the exact data point, but what it means is that the majority of firms in South Africa are still dissatisfied with prevailing business conditions. And if you are dissatisfied with prevailing business conditions, you're going to be loath to invest, you're going to be loath to employ, because these are long-term business decisions. You don't hire someone with the intention of firing them in a month's time. You don't build a factory with the intention of closing it down within a month or two. You build for the long term, and for that you need to have this, and it's a sort of soft data, but you need to have the feeling that it's an appropriate time and an appropriate business decision to make for a number of reasons. The second graph that I have on the right-hand side is a question that we ask around within our manufacturers. So the question that we ask is the political climate a constraint to regular business operations? We don't define what political climate is to them. So it could be xenophobia, it could be load shedding, water shedding, it could be national political dynamics that influence their view on whether or not politics or the general political climate constrains their business. And very interestingly, in the run-up to the national elections, we saw this index move very close to its long-term high. In fact, in 2023, it was at as high as it was in the fourth quarter of 1993. And at that time, you could cut sort of political tension with a knife, and not even a thick knife. And so that is what firms, manufacturers revealed is their view of the political environment as being conducive or not conducive to business operations. And then in the second half of last year, this index fell significantly off the back of, or on the back of, the formulation of the Government of National Unity. Now, remember, they've done nothing yet in that third quarter survey round, which was done just after the elections. But it was the intention or the expectation that policy would now be more rigorous, policy would be now better articulated, and importantly, that there's going to be a greater mandate to get some of these structural reform issues going forward. So a policy, and sort of also knowing that some other parties are not at the sort of decision-making table, provided manufacturers with some sense of ease. That has quickly dissipated. In the wake of the discussions around the budget, the first one, and the second one, and eventually the third one, which may not be passed, or where not all of these appropriations may be passed in the upcoming sittings. So very quickly, the sentiment around political climate has swung. And it just shows you the degree of sensitivity that firms are sitting with. You can track the consumer confidence graph as well, and you'd see those same sensitivities. We've been so gutful, I don't know if there's a better word, of these sort of constraints that we are glad that things are changing, but in the back of our mind, we are ready to be disappointed, and sentiment sort of takes that turn once again. And really, if one looks at a quick win for the South African economy, it's around building the sort of credible policy space that can boost sentiment. Firms have access to capital to invest and employ, but they're hesitant to do so. because they're not confident in the shape and form of the economy as is. Moving on then to, and that was just coloring in the sort of national picture to look at the CIDB results more acutely. Do we have those graphs up again? The slides. Maybe I could just provide some background on the survey. So the BER has been conducting the survey for the CIDB since 2008, and it's built around the methodology that we use for our overall headline Building Confidence Index. So it comprises of 3 questions. The first question is around sentiment in the industry. The second set of questions are around sort of operational factors. So one, is activity improving? Is profitability improving? What does tendering competition look like? And the third set of questions relates to the constraints. So we sort of curated a set of constraints that respondents can focus on, but ultimately ask them how severe this constraint is for your business in any particular quarter. Now, the difference between the BER surveys that we do on a regular basis and the CIDB survey is that we do this exclusively among small businesses, so grades 3 to 8. The BER surveys then would focus on firms that do work exclusively for the private sector, and then larger firms, so your grade 9 firms. And the second quarter survey, just to give you a sense of the timeliness of the results, was conducted between the 7th and the 26th of May. And the results were processed and available to the CIDB already in early June, although we officially sent it to them only at the end of June. And the key difference between this data and the data, or there's a couple of differences between this data and the data provided on an official basis. The first is that this is sentiment data, and although it tracks official data very accurately, one cannot always compare the fall in the index or the rise in the index with a very specific year-on-year change. So if the index falls by 5 points, one can't say it's 5%, it's 5% down on a year-on-year basis. But what you can say is that there's a weakening in activity. And if there's a sort of trend developing, you can say there's a persistent weakening in activity in this particular subsegment. The second key advantage is that, as I mentioned, it's available. It's conducted for the quarter and available in the quarter, whereas with Status A and with Reserve Bank data, you typically have a 3-month, even 6-month lag in when data is available. And the third key advantage is that as respondents, so you're the respondents in the room, I hope, and if not, I hope that you will respond as of the upcoming quarter. It's an opportunity to benchmark yourself against the rest of the industry. So if the industry in general is reporting weaker activity, but you're not, something in your strategy or your operations allows you to outperform the sector in any particular quarter. And of course, the opposite argument is true. If you're faring poorly, but you're seeing that your peers, whether it be from a grading perspective, whether it be from a regional perspective, are faring better, then there's a reason to interrogate why that could be the case. And what we saw in the second quarter survey results is relatively benign confidence among small businesses within the CIDB segment. So around 40% indicated that they were satisfied with prevailing business conditions. That means that 60% of respondents, and this is nationwide, are dissatisfied with prevailing business conditions, which more or less puts the industry at its long-term average. At least since when we conducted the survey, but it doesn't speak to a sector where there's really, or it doesn't speak to an economy where there's momentum in terms of the structural reform agenda. You'd see it in these numbers. You'd see it in the official numbers. You'd see it in these numbers first and the official numbers later, but it's not speaking to the statements and the speeches made by some of our political masters around the extent of infrastructure development and infrastructure growth in South Africa. And it's important that we make that statement because this survey is of the respondents in the sector, and it's conducted independently on behalf of the CIDB. So the CIDB and I would often disagree as to the reasons and the causes, but the numbers are clear that there is the sort of persistent malaise that we see in the sector in general. If one unpacks it a little bit further, you'll see that there is a discrepancy around how general builders are faring and civil engineers are faring, where general builders currently are seeing sentiment rise more substantially, and civil engineers are starting to see somewhat of a turnaround. This is, if we rewind about 12 months back, civil engineers were the ones that were quite optimistic and the ones that were experiencing more abundant work. And now that has shifted quite substantially, where general builders are typically taking the lead in terms of sentiment, but also in terms of activity. So it's very interesting that these two subsegments of the industry are moving in different directions, with the one offsetting the other to ensure that sentiment remains at its sort of long-term average. As I mentioned, this is also true in terms of activity, and you will get a copy of these slides. So if you're unable to see it now, but you'll get a copy of the slides. You'll also get a copy of the report, as the CIDB makes the report available on a quarterly basis on their website. So you're free to nitpick and unpack some of the data. But the key trend in terms of the major subsegment is that general builders are doing much better in terms of sentiment, in terms of activity, in terms of profitability. But civil engineers are experiencing somewhat of a differing trend. Now, it could be that some CIDB contractors are also doing work in the private sector, and we know that from the data there's somewhat of a latent revival in non-residential building. So it's not to say that it's public sector work necessarily driving this improved sentiment and work among general builders. There is an element of private sector influence potentially on this, but where we are a little bit concerned is around the civil engineers, which we know is typically government work and typically public sector work, and that has eased among small businesses, but interestingly enough has not eased among larger contractors. So if you look at the BER Civil Confidence Index, it was somewhat lower in the second quarter, but the activity number was actually quite robust. And what we're seeing now is a divergence of the performance of larger contractors within the civil engineering space versus smaller contractors. Now, I'm not here to prescribe any remedies or to say if something is good or bad, but it is a very interesting trend that we've observed over the last 2 quarters in particular. If you look at it from a grading perspective, we've also seen a sort of renewed improvement in activity around sort of mid-tier contractors from the CIDB results. So contractors in grades 5 and 6, there we're starting to see activity improve. So it does seem as though there's a particular momentum among larger contractors and mid-scale contractors, which is not being replicated or experienced among smaller contractors and even contractors sort of in the middle to high range, which is your grades 7 to 8. Moving on to the regional level, so much has been made around over the past couple of quarters around the performance of the Western Cape construction sector. You would see it also in some of the latest data in terms of building plans passed, and it is also reflected in the CIDB data, at least up until the second quarter, up until the first quarter of this year. So we had seen through most of last year the activity index and sentiment indices of Western Cape contractors far exceed that of other regions, and it was noticeably so. But we are starting to see that tick down in the most recent iteration, but it can also be a base effect because we ask them around what growth in activity looks like and not necessarily the level. So typically if you come off a slightly higher growth path, even though the level is still substantial, you would naturally see growth start easing. and that's particularly in the Western Cape. In Gauteng, what we've seen is that activity momentum has started to stabilize, so it is still above its long-term average, and it is moving on a relatively stable trend, which is positive, as Gauteng was sort of one of the underperforming regions within this particular subset of data over the last while. Subset of data over the last while. So there is, again, because we're unable to see the slides, you won't be able to benchmark yourself against the selection of peers right now, but you will get the slides and you will get the report to sort of interrogate and to sort of look through as you have the opportunity. What I do want to maybe close off with around some of the trends that we're seeing in Gauteng is particularly around the constraints. So we asked the questions around sentiment, we asked the questions around activity and profitability, but then we also ask about constraints to the sector. And we ask the questions are directed towards 4 constraints. One, it's the availability of skilled labor, whether or not that is sufficient. It's the availability of building materials, insufficient demand as a constraint, which is our proxy for order books. So in other words, if that index is high, it means that new demand is not easily available according to the subset of contractors, and then access to credit as a constraint. So are you finding that to be hindering sort of regular business operations? And what we found in the second quarter results was quite telling. Most of these constraints were at and around their long-term averages. Where we saw some deviation is in terms of the shortage of skilled labor. So contractors in Gauteng rate the inavailability of skilled labor as a higher constraint than they typically would. And usually that is a sign or a positive sign for demand or for work, which compares well with the stability in the activity index that we've seen. So if you're not working and there isn't skilled labor, it's not a constraint. So the skilled labor constraint really only raises its head relative to demand at that particular time. So there are some latent indicators that that the stability in activity seems to be more ingrained within the sector's performance. And where we started to see more substantial deviations is in terms of access to credit. So the long-term average for this index, which we've collected since 2012, is around 37%. So around a third of contractors say, well, access to credit, or contractors in Gauteng say access to credit is constraining our business's ability to work. In the second quarter survey, that number was sitting at 53%. So more than half of respondents are saying, well, access to credit is becoming increasingly a problem. And this is at a time when interest rates are generally moving lower. And it's a good opportunity to unpack what some of those factors would be. It could be bank lending standards that are more stringent given the sort of general risk premium on South African business at the moment. It could be that some firms no longer are in the position, that some firms are no longer in a solid or sound enough financial position to qualify for credit to the same extent as what they did previously. So there's a number of reasons why this can be a rising concern at a time when interest rates are actually falling. And one last comment around the constraints is in terms of that insufficient demand indicator. So while activity, or the question around activity showed that things remain relatively stable, and you can see there the red bar indicates, or the maroon bar denotes Gauteng's performance in terms of activity over the last couple of quarters. So while that remains stable, the concern is around whether or not there's going to be more work in the offing. And our insufficient demand constraint, and I see that, okay, for me it's small, for you it's hopefully not as small. The long-term average is at about 70. So since 2008, it's been the most pronounced concern among firms in Gauteng. And although it's somewhat lower, it does indicate that while we're seeing the stability, we need a little bit more oomph to really get new projects off the ground to create a new demand for contractors. And that is where I think we may be open to somewhat of a positive surprise. So along with questions around what the current quarter looks like, we also ask questions around what firms expect in the next quarter. So in this instance, what firms expect in the third quarter of this year. And the survey we conduct sometime in early August. Now, the disclaimer here is that firms often get it wrong around the expectations, but so do economists. And, but it does explain how confidence can shift and mood can shift. Sometimes there's movement in the market that is not materialized, but you're seeing. It could be tendering activity, although it's not adjudicated yet. It could be announcements around budgets where you're pretty clear that this municipality typically spends well, this province does well in terms of spending, in terms of health infrastructure, education infrastructure. However you see these things evolving, there does seem to be significant positive momentum coming through from respondents. In fact, our respondents expect an improvement in activity, significantly so this quarter, and an improvement in overall profitability this quarter. And that partially explains why we saw some better numbers in terms of overall sentiment. Whether or not it would materialize, I see there's people smirking. I don't know if you submitted a survey, but whether or not it would materialize is unsure. But there's definitely indicators from our survey respondents that there is early signs of things looking better, at least over the short term. My apologies for the technical glitches, but as I said, you will get the slide pack, and I'm not sure if there's an opportunity for Q&A, but we can make that opportunity available if you. So let's open up for some Q&A if you have any. Nothing about policy announcements in the US, please. Yes, there's a question about the gentleman.
Okay, Kale. Thanks, Craig, for that wonderful presentation. Just observations, two of them. One, I'm not too sure if I might have missed it. You make reference to Western Cape and Gauteng. I'm not too sure whether the other provinces, were they part of the...
So we do survey all provinces, but we found that Western Cape, Gauteng, and KZN have a big enough response rate that we can analyze them separately. So if you combine the numbers for these three regions, you wouldn't get to the total. Because there's are respondents in the other regions, but not sufficient for us to say this is a trend and this is a story.
Okay. All right, thanks. Now the second one, in terms of the comparison between the building and the civil engineering contractors, about the sentiments, activity, profitability. As a percentage, what is the percentage of the building contractors vis-a-vis the civil engineering contractors overall, and in terms of the components?
So what we've found is that the response rates are relatively similar for these two, general builders versus civil engineers. But if one had to compare it to the building results that the BER produces, our sample is slightly bigger in terms of general builders and slightly smaller in civil engineers. And that pairs with the type of work that the CIDB is typically involved in, which is public sector predominantly for now, which is in the civil engineering space. So it makes sense that we'd have more civil engineering responses in the CIDB survey than we have in the BER survey. But typically, on average, we get a good 70 to 80 respondents as we go through the quarter. There was somewhat of a drop-off post-COVID, or not post-COVID, post-bank or post-office collapse. But it's a stable enough sample that we can draw the relative inferences. But we are always welcome to more respondents participating. You would get the reports and the results sooner than what the CIDB typically makes it available.
Good morning, colleagues. I go by the name Roy Mnisi. I'm from Master Builder South Africa and the JPCC. Thank you very much, Craig, for a very good presentation. I actually, when listening to people like yourself, I understand why commercial radios, TV stations put economic-related programs in the afternoon, because it becomes so difficult to digest it in the morning. Having said that, I must say that I'm very much worried when I listen, not necessarily to you, but when I look at the economic outlook. One was very much encouraged late last year, early in the year, because we had positive economic outlook. But then, in the midst, a lot of things happen, and then you ask yourself, I mean, are we going to see this happening? If it happens, is it going to be short-lived? I don't want to get to the Americans, the Russians, and other people that are fighting, because those guys, they go to war, they fight, but they come out being stronger than before, running big economies. I want to reduce it to our local situation, which you have already highlighted, and you touched on the political aspect of it. We don't want to talk politics, but the reality of the matter is that the political turmoil, political situation create economic turmoil as well. Economic turmoil create turmoil in our sector. We are not able to work. We are not able to build this construction sector as people that are having that task to build this sector. Now the question is, looking at our internal economic situation, would you say that we perhaps need something like an economic revolution of some sort? Because there are things that are influenced, of course, by the global world, but there are things that can be influenced internally. I would like to hear you on that one. Thanks so much.
Thank you, Roy, for that question. I'm going to respond to Roy's question before I forget, and then we can go to the next question. So you're quite correct. I mean, we've also surveyed the sort of broad economic landscape, and that's why I started with the global economy to say, well, we're not going to get growth here. Growth is not going to come from faster exports. If we're going to see growth exceed 1%, it's going to have to be internally driven. And we've, for a long time, put our flag on the mast of looking at promoting fixed investment specifically as the driver for economic growth, as the catalyst for economic growth, around, as a starting point, the structural reform agenda, but then proliferating to also include consumer spending and employment. Because if you start building the infrastructure and the economy can start working, if you can send your product abroad, even if demand is weak, right now demand is weak and we still cannot send things out. But if you can send things out, we can invest in manufacturing capacity, we can upskill people, those people spend, those people then create jobs in the retail sector. So there's a multiplier effect in the economy that comes through from these initiatives, and it really is internal stumbling blocks. If you look at, and I use this as my favorite example around, and I didn't include the slide around the renewable energy program, it was just a flick of a pen that sort of unlocked private sector's capacity to build projects without having it sort of first intensively vetted by NERSA. And just on the back of that, and we've done some scenario plans, and we've had to sort of tone it back. So if you look at if you go to the NERSA website, they give you an indication of the extent of megawatts that are being built or that are registered by the private sector to be built in the next 18 months to 2 to 3 years. It's significant. And it was a regulatory change that was able to make that. And a number of the easy wins for our economy are related to regulatory changes. we can easily, with a couple of swift moves, get economic growth to 3% on a sustainable basis. Now, 3% is still not enough, so the challenge is moving from 3% to 5% is going to be much more daunting, but at least let's kick off the program and pull the levers to get us to 3%, and there is movement. I'm not too convinced about Operation Vulindlela's scorecard, but I know there is movement. We're seeing the call for proposals coming through in terms of the transmission lines from the Minister of Electricity. We saw the calls for interest in terms of how to manage our port infrastructure from the Minister of Transport. And those are all movements in the right direction. It's taking longer than what we would have liked. So you're sitting without electricity now for 8 years, and now you think to yourself, okay, the lights will be switched on in 3 years' time. Still feels a little bit long after suffering for 8 years, but there is momentum. And we do feel that the politics is getting in the way. The coalition politics, the corruption politics is actually getting in the way of getting the job done. There's even talks that the G20 is getting in the way, because a lot of the people that are supposed to focus on reform are now focused on planning the sort of international summits instead of planning the infrastructure program that needs to take off. So there's a lot of, as you said, mist that clouds the senses of the people that really just need to implement and get things moving. But it is within our ambit to get to 3%. And there are particular levers we can pull without being dependent on the export environment to really lift growth. It requires political will, and it requires accountability that these things get pushed through effectively.
Thank you so much, Craig. Carrington Tlale, Black Business Council in the Built Environment. I just have two questions. I think in your presentations you highlighted, I saw that 2008 there was a decline in construction confidence. And yet we were at the height of one of the biggest construction move within the country. So I just want to understand the correlation within that. Was it just a general feeling around the country, around a decline, even with the massive construction that was taking place? So it just doesn't make sense for me that when we were busy with construction, we still had a massive decline in construction confidence. So are we looking maybe at the wrong area? So if we're seeing cranes, does it mean, yeah, so I just need an understanding on that. And then lastly, I see you have highlighted constraints and you have seen constraints. Can you share with us what solutions, there were 4 constraints: shortage of skills, inadequate supply of building material, insufficient new demand, inadequate access to credit. I think you probably have solutions that you have actually explored. I'm not sure if the report has got recommendations on solutions. If they are not there, and if they are there, can you please just share them with us? Thanks.
So in terms of the confidence, you're quite right. That was a period when construction was doing exceptionally well, much better than the rest of the economy. So what we're seeing in construction confidence was really just how it pairs with the economy in general. We know that it was in the wake of the global financial crisis, South Africa went into recession. It was really just the construction sector that was outperforming for very particular reasons. If it wasn't for the FIFA 2010 World Cup final, it probably also would have slipped quite significantly. So it was around the broader economic picture that weighed on sentiment on the construction sector, and also the private sector component. So public sector projects were still doing quite well, as I mentioned, but the private sector, if you look at the housing market, it tanked during that period. And there's likely that there were CIDB registered contractors that had a heavy footholding in the residential sector. And that would have most certainly weighed on their sentiment. So it was a case of it simply moving along with the broader national economic cycle at that time, as we'd hoped to see. In terms of the constraints, so I always try and distance myself from sort of policy proposals or suggestions, because we do the research and the CIDB comes up with the perfect answer to why and how we can address these things. But we do feel that there's an opportunity, particularly on the demand element, is to get the structural reform agenda moving. If you look at the numbers that are being proposed for infrastructure investment, it would be a game changer for the sector. But it's not reflected in national statistics, and it's not reflected in our statistics. And as soon as that is unlocked, I think we're going to see an even bigger rise in some of those other constraints, because as I mentioned, a lot of that is relative to activity. We're going to see a rise in skilled labor constraint. We're going to see a rise in the building material constraint. These are not as easy to fix over the short term. You know that it takes a while to develop an artisan, to develop a builder, to develop even a project manager. Under the pressure of a fast-moving infrastructure drive that may be hard to pull off, it's actually a risk. And I think it's a risk that the sector has already identified that. Do we even have the skills for the infrastructure plans that we're promoting? Do we even have the skills locally? And we've not seen the lever pulled to be in that position to ask the question, but even in this period of weak demand, relatively weak demand, we're already seeing that skills are quite a key issue. In terms of the access to credit, I've shared some of my initial thoughts with the CIDB in the past, but there is an opportunity for industry bodies to speak to financial institutions and sort of make better terms, make better arrangements in order to get especially access to finance for small businesses who rely on that in times of weaker cash flow relative to large businesses. So there are opportunities, but I think what the survey tries to do is paint a picture of what the dynamics are in the sector and what sector role players, including yourselves, to formulate and craft the appropriate interventions and the appropriate solutions. I was just speaking to Elsie earlier on about us being both Western Cape based, and now it's sometimes difficult to speak to Gauteng contractors because we're not here. You know, you see the cranes in Stellenbosch and you see student accommodation growing. You think to yourself, wow, I can't afford to live in Stellenbosch. But so even in that sense, as the analysts, we look at the data and the numbers and we engage with stakeholders. But I think when it comes to solutions, it needs to be a multi-stakeholder approach because we can include and encapsulate a broader set of themes and interventions that we as the sort of desktop analysts. I do paint though, I enjoy painting, but that's the closest I get to physical construction. But from a data analysis perspective, it is sort of the best solutions usually come from the sort of collective thinking of the industry.
Thank you very much, Craig. My name is Gregory Mufuke. I'm also with the Black Business Council in the built environment. First thing that I want to ask you is around your measurement of sentiment. Is it sentiment that you are looking at now, or do you also ask respondents to talk about their views and sentiment as far as their future prospects are concerned, maybe the next 3 to 6 months? That's the first one. Second issue, you spoke about the data lag between what you do and what there is, the Stats SA will be doing. Now, once that data comes through, and I'll take some time just to compare between the two data sets, but I just want to have your understanding in terms of when you compare your data to their data, how close to each other are the data sets, if we can have that view. But we'll also take time to look at your data and the data that comes out of Stats SA. The last thing deals with what my colleague Muhlompe Tlale raised around the issue of skills and access to finance, and this will not be directed to you. It will be directed to the CIDB management, and I'm glad that one of the board members is here. And I must say upfront that colleagues, we didn't pay Craig to promote us as industry associations, that will talk to the banks so that the banks can make money available to SMMEs. Aramu Padala, Ismail, we didn't pay him. Now here's my issue. We always talk about these challenges when we are meeting with the CIDB. But the solutions are something else. I mean, we've got built. This money should be directed towards this sector that you're talking about. So the decisions that we are making must make sense for the industry. Can't be decisions that are made and the impact is not there. So when we get involved as industry associations and propose ideas on the table, CEO, our ideas must be taken seriously because we understand the challenges that our members are facing. And you've just rightfully noted that the demand at the moment is weak. That's the feedback we are getting from our members. Once you get this market heating up, these problems are going to increase. So we need to implement solutions. We didn't fight for build to be ineffective. Build must be effective. And we must make sure that between the industry associations and the CIDB, we come up with solutions that make sense. Solutions that will have impact on the ground. Thank you very much.
Thank you. Let me address that first two questions, and those will be my last question. That will be my last question, if you don't mind. I think, so we asked them, are you satisfied now, today, with the sector? So it's very much current focused, but when we ask the questions around activity and profitability, that's where we ask them what's the expectation moving into next quarter. And we have found instances where sentiment is not driven so much about what's currently happening, but what businesses expect to happen for whatever reason. So it has a bearing on sentiment today, even though it's not going to be reflected in the underlying indices in the current quarter. Around the link between Stats SA, so that's part of our due diligence. It's not prudent to have an index that doesn't measure or track anything. So we do regularly compare our numbers to Stats SA. It's not, that comparison is not available in the CIDB report. It is available in the report that the BER publishes. But every quarter we update the sort of activity indicators to compare with investment spending in the residential sector and the non-residential sector and construction work. So we do the due diligence in terms of ensuring that our index still tracks what it's supposed to track. Tongue-in-cheek, maybe they use it to track the data, but that's not the case. We do retrospectively compare our numbers to Stats SA's numbers, and it is a close co-movement between the two, even though the numbers speak to different types of indicators. Thank you. Thank you, everyone.
Okay, thank you, Craig. I think Mr. Makanya and between him and CE will take the CIDB questions. Thanks.
Thank you. Just to touch on the last question, I think I must start by saying it's a fair question in terms of the issue relating to build. Of course, if there's one area that I can say as a board member where in our term we've failed as a board, is that particular area. They know, management, they know that it's one area that we are not proud of in terms of raising those monies specifically for certain activities, and those activities are not done in time. Yes, it's one area that I think if you look even at our, if you look at our assessment, one area where we have failed, I think I do agree with you. We failed in that, but there are some strategies that are being put in place by management to try and improve in that area. With certainty, CE, probably you'll touch on that, but I was just wanting to confirm, you are correct, that's a disappointment at this stage. At least the first step towards solving a problem is to acknowledge that it is indeed a problem. It is a problem. CE will just touch on that in passing to try and well, I've actually said on behalf of the board that it is a problem. So what are we doing to solve it? Because it's a good point. So CE, maybe I'll ask you just to narrate on that. Thank you. Yeah, probably maybe now before the break, while we're giving them a little bit more time to sort out and the break afterward, my apology. Because it's part of the question, so let's answer all the questions, then we'll continue with the new session.
Thank you, colleagues. I knew there was going to be a problem if they're all sitting together. but the Minister of Police is very close. So he can help us. Yeah, no, the build program had, as any other national scale program, teething problems on the starting off. But yesterday at EXCO, preparing for also appraising the board, we've probably done more on the issues like on the skills development. The movement there is quite rapid now. With the partnerships that are being established and have been established. Assessments of prior learnings are going on in most provinces. The issue where it has been slow is the issues around the developmental finance. And Gregory, you are correct to saying when the industry picks up, as it will pick up, then the issues of developmental finance will also be raised as to the commitments that we had made and the funding that we've made available to our partners like CIDFA, what has been the impact of that. So those parts, yes, we are open to, and we had also presented other alternative strategies on how we diversify that particular investment. We, following what industry also is saying, let's look at more DFIs, let's look at private sector and others. But Gregory also and colleagues, when we talk also to the other DFIs, they must not tell us like go to, okay, yeah, we go to others, and then they say, hey, you want what? You are putting in 200 million, we want us to measure it. They say, it's a small transaction for us. It's just for one transaction, When you are looking at SMME support, it makes a huge difference on contractor development program if you can make 100,000 available for people to pay salaries for the first month whilst they're waiting to be paid. So we need also DFIs that understand the scope that we are dealing with. On the larger projects, a 2 billion rand project, we will not be able to do developmental finance on that because it will exhaust all the funds. But when we're working with the other DFIs and clients, you promised me, Sandra, Luguti, Sandra, we are going to co-develop something together with them. Those kinds of things also need to do. We will never do as a CIDB create any of these solutions in isolation to the industry because, as the Chairperson of Social and Ethics was indicating in the opening, we also rely on the expertise that are there in the industry. Hence, we try to make these engagements as frank as possible and also share our views, get views from others. I know I've said a lot of things, but yeah, a build this year will probably be our biggest achievement as a CIDB, and the first quarter results are indicating so in terms of the trainings and others, and the oversight that the board is providing will also assist a lot in the outgoing board. I have to just sneak that in. Yeah, it will also provide a lot of support for us to be able to, and we are really genuinely committed. And I'm sure no stakeholder will say we don't want to work with stakeholders here fairly so. Nah, thanks.
Thank you very much, colleagues, and thank you very much, Craig, for that very insightful and prompting presentation. Just on a lighter note, maybe just to give you comfort, is that I started my career in economics as well. But when time went on, and I was like, every time there were problems, we blame the economist. When we start coming up with solution, we thank the economist. So the technical glitch was also part of blaming the economist, but once we start coming up with concrete solutions as to what your insights are providing, we are gonna definitely come back and thank the economist. So on that note, colleagues, apologies again with the technical glitches for the colleagues that are in the room, but I think in the interest of time, let us continue. And then this is now introducing our second strategic partner speaker, Ms. Elsie Snyman from Industry Insight, who's going to provide us the economic outlook for Gauteng and how this then impacts the industry, the construction industry in the province. Please, ma'am, the stage is yours.
Morning, thank you very much. Do I need to adjust this for height? Can everybody hear me properly? I just want to make sure how to use this. There we go. Okay. Yes, please. Right, how do I go back to the start? I just want to make sure that we are... This thing only wants to go one way. All right, well, we're going to start. Sorry, guys, this is woman driving. Okay. No, I think I've got it.
Back is that button there.
Back, and the other one is?
Forward.
That's forward. Okay. Right, thank you so much for the invitation to CIDB and to the CIDB board. This is an industry very close to my heart. I always say this is my most successful long-term relationship because I have been in this industry for 30 years. And I guess that kind of makes the construction industry my soulmate. So very close to my heart. We have been through some of the highs and lows of the industry, as you can imagine. And through the years working in the industry, we've built a close relationship with other associated companies. And one of the companies that I want to mention, because a lot of the information you'll see will be coming from research from DataBuild. So DataBuild does project information, leads, etc. And within the public sector space especially, it is a stronghold because in theory, tenders in the public sector should be advertised, it should be on an open portal. They don't only do public, they do private as well, but we've been collecting data on public sector tender activity and awards, postponements and cancellations for over the last 20 years. So using that kind of information, we add that to what is the Stats SA is saying, what is the Bureau of Economic Research also saying, and then also what is National Treasury saying in terms of what is the industry doing. It allows us to drill into the different provinces, which is what we will present to you today. We also look at the provincial and the metro capital expenditure budgets. For today, I've used basically capital. The infrastructure spent is within that item. It's not capital, isn't construction, and it's not all infrastructure. But if we're not seeing an increase in capital expenditure, it's ultimately going to impact on construction. And really, local government is where we get the basics right. If within our metros and our locals, we are not increasing capital and effectively spending budgets, basically, we cannot have growth in the industry. So we do a lot of work focusing on what the metros are doing, and then I'll also be looking at, well, what is the private sector doing in terms of the Gauteng market. So he just told me. Right. So for a quick profile, I think just of the Gauteng construction industry from our perspective and what we've seen and through the research that we've done, has a very high urbanization rate. And I think that on the one hand is also a benefit to the Gauteng market, where perhaps there's a better handle in terms of your informal market and the impact that would have, much higher than the national average, which is sitting at about 68%. It has the highest construction labor force, 334,000 people are in the construction labor force in Gauteng compared to 1.2 million nationally. And interestingly, in the first quarter, the last data that we have for the change in the labor force, there was a lot of media about the construction sector was really performing badly, what showed a very steep decline compared to the fourth quarter of 24. But there's it's normal for the labor force to contract in the first quarter coming off the fourth quarter of the previous year. You know, you've got December coming up, projects are being finished. It's normal for a slowdown. What is important is what does it look like compared to the same time last year? And in Gauteng's case, that's actually an increase of 15%. So in Gauteng, we had an expanding construction labor force. Nationally, that increase was only 2% year on year. So Gauteng actually did better than the national average. It's very difficult to know what is the size of the industry. You know, you've got Reserve Bank, you've got data published on fixed investment and how much we're spending on civils and constructions, but drilling that down into a provincial level is a little bit more difficult. We estimate roughly that the size is roughly between, we say 42 billion, I suppose more fair would be to say between 40 and 50 billion, and that's about 23% at the moment based on the size of the pipeline that we see of the national total. And the public sector is sitting at about 12 billion based on the tenders that have been submitted over the last 12 months, and that's about 15% of the national total. The public sector is 30% of the total size of the construction sector in Gauteng, but of course the public sector is not about the size, it's about the impact that proper government spending has on infrastructure and the spin-offs that will have on the private sector. So even though it's only 30% of the total actual rands and cents in construction, the impact is much broader, as you can imagine. So because we have a love for the metros, and I firmly believe, unless you get the basics right, all the plans, all the big plans that you have will simply not materialize. People live within a specific metro in a specific area, and that is important that those kind of investments and those kind of infrastructure spending takes place. But so as I said, it's without, if you have good governance, that is going to attract higher levels of investment, but the opposite is also true. Where governance is not good, maintenance is not done on existing infrastructure, new infrastructure to cope with population growth, you are also going to lose investment from the private sector. So it's important to look at the metros, and what we have seen specifically in the Gauteng metros, and this is nothing new, I think we are all familiar with that, is the high turnaround of mayors. If we look at City of Joburg in the last 5 years, they've had 7 different mayors. In Tshwane 4, and also in Ekurhuleni 4 different mayors. And of those, all of these mayors, all of them have been there for less than 18 months. So that high turnaround creates a lot of uncertainty. It's very difficult to also then have accountability because the mayor is not long enough in position to put the plans in place and then actually to see what the result of some of those plans were. And that creates a high level and every time a new mayor steps in place, it affects the infrastructure spending. Projects that either delayed or that this mayor has a different idea. So it's very disruptive. In the city of Cape Town, for example, we've only had 1 mayor for the last 5 years that are there to implement and also then to be held accountable for what is done. I feel very sorry for some, and sometimes you have to change mayors, we can't deny that. But it is a constraint on the metropolitan performance. In Tshwane, and I think this is important, if we look at the city of Joburg has the highest capital budget, 7 billion. But if we compare that to the population in each of the different metros, Tshwane's average capital spending per capita is a dismal 564 Rand at this point. And if we look at Johannesburg, it's 1.6, that's national average, but Ekurhuleni is also under 1,000 Rand per capita. In the city of Cape Town, for example, we're sitting at 2,400 Rand per capita. So there's a high disconnect between the metro performance and what they should be spending and where we are at the moment, and that is certainly concerning. If we look at in terms of total spending, and this is an indicator I like to look at, how important is capital, and by that infrastructure, within a metro's budget? Now, if we take Ekurhuleni, for example, in 2016-2017, that was sitting at 14% of their total spending was on capital, and now we're sitting at less than 5%. In the 25-26 budget, slight increase to 4.7%, but nothing to get excited about. Tshwane is the same. In 2012, they spent 18% of their budget on capital, more than what Cape Town is doing at this point. But then it has fallen to a dismal 4.5% as well. Very poor performance. Johannesburg was at 20% in 2014, 2015, and they're probably now trying the best performance, close to 10% of their capital budget, and slowly clawing their way back, so to speak, from 9.3% last year to almost 10% this year. Of course, these are budgets, and what really happens in terms of actual spending is a different story, but the intent is there. Cape Town is averaging around 15%, also down from 2012 areas 10 years ago from 19%. So it didn't maintain, but has started from 13% in 2022 and now sitting at 15%. And that makes a very big difference in terms of attracting investment. It is important to invest and maintain infrastructure, as we very well know. I have to do two things, and women can multitask, but that's not always the case. So I'm going to make sure that we're on the same slide. So if we look at the capital budgets for 25-26, I think that is important, and they've also released their budgets for the next 3 years. So what can we expect? So combined, these three metros have a capital budget of about 15 billion rand. What I call spent on infrastructure-related items like housing, health, education, road, water, energy, is between 70 and 75% of that budget. And we are seeing an increase. That's the good news. So for the 24-25, now these are preliminary figures. When the final year-end figures come in, 9 out of 10 times there's a revision downward. But for now, that showed an 11% increase on the previous year, and then for 25-26, there's another 11% increase in nominal terms, which means Johannesburg, for example, is going to increase their budget by almost 1 billion rand for this 25 financial year. But then the growth rate slows to 7%, and then ultimately, for the end of the 3 year, that's projected for now minus 2%. So we are getting off a higher base, and this is really basically the push from the city of Johannesburg. This is where it's coming from, and then stabilizing around about at that 15 billion. So based on what we see in this, it's not going to cut your wrists, but an average growth of 5% over the next 3 years compared to an average increase of about 12% in construction costs, saying 4% per annum, in real terms, this can mean that there's obviously going to be less money, because that's the one thing that governments just never do, is they do not account for inflation, construction cost inflations in their budget. Which is why in what you see in the news, it looks fantastic, but when you actually bring inflation into it in real terms, it's on a decline. So in terms of the performance, this is one slide I'm going to move and leave to the CIDB. I think they are going to be talking on the different performance in the client sectors. So I want to talk a little bit about the elections. So when the elections came up last year, in the run-up to the elections, we know how important infrastructure was. It was the main focus. There was not a news article or a TV station that was still not reporting on infrastructure, bold promises, how they're going to improve service delivery. And I remember about 2 months before the elections, or even actually beginning of last year, we said we're feeling tremors, that something is happening. We started seeing an increase in some of the tenders, etc. But we were very aware of the fact that there's what you call an election dance. So, you know, when elections coming up, you see tenders starting to increase, but then after the election, you know, now we take. You know, so you give and you take. We call it an election dance. And we weren't disappointed at a national level. It was quite severe, the drop off, especially in the civil industry after the elections. But if we look at just in terms of Gauteng's performance as well. So you can see there the dotted line, if it's clear enough to you. At one stage, those tenders were increasing by 30% in the run-up to the election at a national level. Very high growth, a lot of optimism that we saw, as Craig also referred to about the civil industry. That is where the growth was. Economic infrastructure, we understand the crisis that the country was in at the time. But then once that election was done, we saw it in the month-to-month data, immediately we started seeing a decline in the civil tenders specifically that was released. And we are still in a decline in terms of civils nationally. Gauteng market was a little bit different, more stable, didn't see this massive increase and also didn't see this significant decline. So the Gauteng market showed a little bit more stability, but is coming under pressure now in the last, we would say this year, is starting to show a lot more pressure. At the moment, it's down by about 10%, but compared to a 33% in national. And that's measured over the last 12 months, the trend line. But if we look at just what happened in the last 5 months, the first 5 months of this year, up until May, I haven't done the June data yet. I was very busy preparing this presentation, so I'm late for that. The number of public sector construction, so this is building and civil, in Gauteng is down by about 31%. That's a third lower than where we were last year. And remember, last year we weren't coming off a much higher base. Where the national tenders were increasing strongly, Gauteng was a little bit more subdued, didn't fall, but it didn't really show that strong spike. So it's coming off a lower base, actually, or not a lower base, but not as high base as what the national decline is so far, with 33% down. But it's not unique to Gauteng. All the provinces are showing very depressed, except for the Free State. But in the Free State, we have also seen a much higher propensity to cancel and postpone projects. So even the Western Cape, we can't always just say good things about. Even in the Western Cape, the tenders are down, the number of tenders are down by 22%. But in provinces like Limpopo and Mpumalanga, Northwest, that's more than 40% decline just on a year-to-year basis. It is a market under pressure, and it is a market that are faced with significant challenges, as we know. If we look at the longer-term trend, so for those of you that were here 20 years ago, I'm sure there's a hand or two. Nobody? One person that might remember the days when in Gauteng market specifically, in the public sector, there were over 700 tenders released every year. This is a moving annual total for the public sector. And then, as I spoke about, the election periods are in there, where you can see in the run-up to the 2000 election how tenders increased, and then after that period, we saw the decline. In 2014, we saw a little bit of an increase, but a decline after that. 2019, not as bad, but then we had COVID. That was really, had a big impact, obviously, on tenders. And then, as I said, it was more stable within the Gauteng market. But if we compare it back to 2004 levels, the Gauteng market in terms of public sector tender activity, jobs in construction, is down by nearly 70%. That's a huge decline. It's very similar on a national basis. It's not unique to the Gauteng market. But we have recovered a little bit since COVID. We're on par basically with 2009 levels, but in reality, we are really operating from near record low levels if you look at that trend line. Highly competitive sector, and of course that impacts on profitability and margins. So a profile of the tenders that we saw. I looked at the breakdown between your grade 9 projects, a very small market, only 8%, but obviously big impact. Your grade 9 projects is where your big projects are coming. We say 200 million and up. The reality is the average value of grade 9 projects now are more closer to 350 to 380 million. And that's not including, obviously, the billion rand projects that some of the Rand Water and some of Sunrail have released recently. So small percentage of the market, big impact. The 7 to 8 grades are about 31% of the total tender activity. This is now for the first 5 months of this year. But the most of the work is in your 5 to 6 grades that were 35%. Now the 5s and 6 grades, the 7 to 8s, they had a better industry in 2024. There was more tenders coming out within that grade segment, but it's all depressed if we look at it now for the next, for this year, for the 5 months this year. The only one that's shown an increase so far is the grade 9s. That's up 50%. Very small market though. I think I don't have the exact number of the projects with me now, but we're not talking, I think it's 10 or 20 projects over a 12-month period, not just for the 5 months. So overall, it's all the grades in Gauteng that are under pressure, and that would need assistance, like some of the things that we've spoken about, some of the constraints that they have also need to be addressed. These are also the trend line. I don't want to spend too much time on this. I thought I was going to have an hour to talk, so my presentation might be a bit longer. So I'm going to move along. All I really wanted to say with this was, showing that decline across all the grades. And then your grade 9 projects are not showing the same kind of decline up into 2017-18. There were some nice big projects coming out. We then also had junk status coming in, but it's a smaller market, so it is far more volatile. But in 2019, before COVID, on average, there was about 35 projects, grade 9 projects, and we're now sitting at about 20 in the 12 months up to May. So also much smaller market, but certainly not showing the kind of declines that we're seeing in the other grades. So it all comes down to profitability in the construction industry, and this is the Stats SA publishes this in their quarterly financial stats. So this is an average for the first quarter of 25. They said the average margins, profitability is 1.4%. Now, with a benchmark, there are companies obviously that do better and companies that even make losses. The medium to smaller contractors can generally maybe sometimes also have better margins. We also saw, especially when the medium-sized companies last year had more activity, they were actually operating at a loss on average at the national level. But that 1.4% is the second weakest overall profitability in the industry going back in the last 15 years. It is a highly competitive sector. And with that, if you think about it, it's even worse than when COVID hit in 2020. And with that comes this whole issue. If you are operating at margins of these kind of margins, 2%, 1% compared to the 5% that we saw in 2013, your room for error is very small. And cash flow is delicate. Payment on time is critical if you are in a position with such small margins. And that brings us to, I'm going to have to put this, I want it to be fancy. I'm not going to be because I cannot do all three of this at the same time. But this brings us to payment. Now, in terms of creditors that are outstanding for more than 90 days, this is a serious issue. Now, we don't know whether this is all we know, this is not just for contractors. But if you are a local government that is a poor payer, the chance that you are paying all your contractors on time, but all your other suppliers is very slim. We also speak to a lot of contractors, and this is the one thing that they have been complaining more recently about payment issues than, for example, the mafia in the last few months. Payment critical. Now, if we look at a national level, 84% of payments due for creditors after 90 days are still outstanding. And if you go back to less than, well, let's say maybe 10 or 12 years ago, that was 20%. And we are not seeing an improvement in payment. We hear there's a lot of talk, especially from Public Works. We know in KwaZulu-Natal, there's a lot of effort to try and get payment on track, to the point where they are even saying we are no longer putting out new projects until we've actually paid existing contractors. That might be the right thing to do, but it has a devastating impact on the industry. And the worrying trend to me is to see how Gauteng has performed over the last few years. So Gauteng, not as bad as national, but sitting at 74% of their creditors are also outstanding now after 90 days. And this really started taking off after COVID. It's like the metros, and because this is aggregated local governments, these are the payments from local governments in Gauteng. And 22.5 billion rand still outstanding from Gauteng. That's a 71% increase year on year of late payments. Now, Ekurhuleni, in the last report they get, which was March 2024, they said they had 0 payments outstanding. Now, if there are anybody here working in Ekurhuleni, you would know if that's the truth. This is what National Treasury told us. But both Tshwane and Johannesburg are both over 60% as well. And Eastern Cape and Western Cape are the only 2 provinces where we saw a small improvement in their late payment ratios. With Gauteng and KwaZulu-Natal, as we also know, the payment issues there have shown the worst deterioration in terms of payment. But your worst performers is Free State, Mpumalanga, and Northern Cape, where over 90%. I don't know how these local governments even operate in this environment. And if you look at their revenue generation, the debtors, it looks the same. More than 80% of their debtors haven't paid in 90 days. So there's a bit of a financial crisis, if you ask me, in terms of the performance in the different municipalities, and how do you then even bring that back to an effective infrastructure maintenance budget and implementation. Despite lower tenders, and this I've used CIDB's data, and perhaps they might even have better data, because I meticulously just sat and copied this from the contractors registrar to understand, well, within a weaker tendering environment, and let's just look at the grade 9 projects. I extracted the grade 9 contractors, building and civil, and I've done it over the last few years. I did it in July 23, and then again in October 24, and then again in May 25. And it's very interesting to see that the number of grade 9 civil engineering contractors, active civil engineering contractors, have increased by 55% since July 23, and the number of building grade 9 contractors up 65. So while this is a good thing on the one hand, we're building capacity in the industry, in the same time, the number of projects are declining. So we are also creating tougher competition within that grade 9 space. But if you think about it, we have 296 grade 9 civil engineers active in South Africa. 296 that can bid on any project exceeding 200 million. And we have about 175 building contractors, grade 9, and we have 117 that have both grades that can tender on some of these large projects in South Africa. But of course, as tender activity declines, your number of contractors increase, that also creates a lot of competition. And while we want to build the capacity in the grade 9 projects, we must also make sure that we have contractors within that grade 9 that can perform, and that they don't simply move into the grade 9 space because of cost inflation. So a grade 9, 200 million rand project technically now should be a 350 million rand project. So out of those grade 9s that are in, can they actually cope with where the benchmark is for a grade 9 project? So to make sure that the performance of contractors are adhered to. So the value of tenders, I don't want to spend too much time on this, but if we know the grade of a contract, it's a 1 or a 2 or a 3 or an 8 or a 9, we have an idea what the average value is at the moment. We don't use the CIDB grades, we use the average value of projects that have been awarded. We can then say, well, what is the average value? What is the quality of projects that are coming out? Not just the number, not just the quantity, but the quality of that can influence turnover and investment. And if we look at the increase in the civil industry in Gauteng in 23, that was sitting at over 17 billion rand, the value of civil tenders that were released. Building at that time was sitting at only 1 billion. But as Craig has also mentioned, we're starting to see this shift from building to civil, or shift from away from civil, moving more into the building space, where it's your building tenders now that are increasing by over 200%. It's a small market, but in terms of social infrastructure, it is critical for that kind of investment to also take place. And Gauteng is one of only 3 provinces in the country where those building values are increasing, where investment in social infrastructure, therefore, is increasing. Very important if you think about it with the elections also coming up. I'm going to skip that part. That is, it's in your slides. It's basically just looking at how some of the capital spending is taking place, but I am on a time constraint, and I want to actually get to the election. So we know that another election is looming. So I don't know if this is another dance. Maybe we should start giving them different names. But there's another election coming up. And we know if the social infrastructure spending is critical in terms of voter perceptions. If we look at a national level, the decline in social infrastructure spending in real terms that I've actually plotted on the chart there, and you look at voter apathy, there's almost a direct correlation. If there aren't proper schools and there aren't proper housing and education and your courts and your police officers are working out of a caravan, what am I voting for even? How am I going to vote for change if that is what is going on? So it creates voter apathy. And in our last election last year, it was the lowest voting turnout that we've ever seen, with only 58%. And in my perspective, I think it has a direct bearing on social infrastructure and the lack of social infrastructure spending. Too much focus on economic infrastructure. It is important, but don't forget the normal person on the ground that also needs investment. And now bring that back into your metro and your local government sphere, where you now have to make sure elections are coming up. What are you going to do as a metro and as a local government about that? In terms of, I actually do want to go back to that. In terms of the Gauteng provincial government, social infrastructure budget, and that this was just released by the Gauteng provincial government. It was a bit of a disappointment. If we look at their planning on education, human settlements and health, that the only one that saw an increase for this year would have been the Department of Human Settlements of 8% in real terms. Education and health are on a decline. In fact, in real terms, from the Gauteng provincial government, there's an average 2% decline over this MTF period. And what is frustrating is that the media, I'm not saying the media is incorrect, and I'm not saying what the Gauteng Premier is saying is incorrect. I'm just saying it could be misrepresented by the impact of what we see. So the media, I can take eThekwini as a classic example, where the Premier said they're going to spend 7 billion rand on infrastructure. And that sounds amazing, 7 billion rand. But what they don't say is, well, but last year we spent 7.7 billion rand on infrastructure. So there's a bit of a misrepresentation in terms of, yeah, but how does it differ from what you spent? What is the real increase that we are going to see? Because on 7.7 billion, did you really see change? So what are you going to see on 7 billion? And it's important that you are aware of this information so that when these kind of announcements are made, that you understand the broader implication. We are definitely not at a South Africa has turned into a construction site, and definitely, certainly not also in Gauteng. It's a fantastic vision, but there's a lot more work that ultimately needs to be done. In terms of the overall, I wanted to just bring that in, the 1 trillion rand that we heard about in the national budget for infrastructure. If we bring in line with that the real increase in that 1 trillion. So we've, over the 3 years coming up, an average of 4% in construction cost, which is really average. 23, it was 6.6%, if I'm not mistaken. So it could even be worse. But we've said an average of 4%. The actual real growth for the next 3 years, with that 1 trillion rand, is less than 1%. That's the reality that we are sitting. And that is if that budget, of course, is spent. The problem that we're also seeing is that within national government, those are the budgets that are trickling down to the local government and to metros. And we have, is it Jacob Mamombolo, am I saying it correct? The MEC for Khulile and infrastructure. He's a stern warning. Metros must get their house in order, their financial house in order. And I want to say, but how? How are metros going to do that if you take Ekurhuleni and Tshwane, more than 80% of their finance, to finance these capital projects, comes from the National Treasury and from provincial. They're highly vulnerable to grants, and grants are regularly cut, as we know. So it makes it very difficult for them to improve service delivery when you are facing cuts. And you are basically have no other means to improve your service delivery with less money, because you are not able to borrow and you are really not able to generate your own revenue. So I guess the only place where that would be possible then for these municipalities is to increase your revenue. And I know that a lot of them are going on this debt recovery drive, but that late payment with indebtors are so entrenched in society, it will be very difficult. It's not a quick win. It will take a very long time to get that turnaround. Johannesburg at least can borrow 2.5 billion. That will help. Western Cape, for example, they are not really relying on grants from government. Only 28% for their capital. 60% of their financing, their capital spending, is borrowed. Now, of course, you also don't want that to get out of hand, but you've got good debt and you've got bad debt. Borrowing to buy a house and invest in capital is okay, but borrowing to finance running expenses, of course, is not a good idea. And these are the kind of dynamics that we also have to understand. Where is the money coming from to pay for all these capital assets? And if it's basically coming from Treasury, and Treasury is cutting budgets, how does that impact, at the end of the day, a service delivery? Postponements have also been on the increase. So even though we have seen a kind of a weakening in the tendering environment, we also have to be aware of the rate of postponements that are increasing. We've had fewer cancellations in Gauteng, but that's also because we've had fewer tenders. But the postponements, you can see literally from the day that election, 2024-05, we started seeing projects being placed on hold. And these are the kind of numbers that you won't just find in the media. It is not reported on. This is through our association with DataBuild. So it is a serious problem. And if we look at it at a provincial level, it is a problem, a broad problem. In KwaZulu-Natal, the postponement rate or the cancellation rate of projects are currently sitting at 33%. And in KwaZulu-Natal, they've had the highest number of projects that have been cancelled, 56. In 2024, nationally, there were over 500 projects cancelled across the country. That is a very high rate for cancellation, and something that the Minister of Public Works said they really want to create a safe environment, on-time payment, and projects that are not being cancelled or postponed. It is your opinion how well you think we are achieving in those three segments. Western Cape has the lowest cancellation rate of about 7%, and Gauteng is sitting at around 24%, slightly above the national average. Eastern Cape has also got a lot of postponements, 34. KwaZulu-Natal, interestingly, they have said no more education projects. Whether that still stands, I don't know. They said something like 3 or 5 years. So a lot of the projects that we're seeing being cancelled in KwaZulu-Natal has got to do with the education sector. And that is detrimental, if you think about it, to education and infrastructure, and the infrastructure backlogs that we are facing. In terms of, I'm not going to speak on the awards. We know that awards are slow. And a lot of the reason for poor pace of awards, a lot of the times, is the contractor performance, contractor performance, contractor performance. Budget constraints, zoning issues, etc. And we've already spoken about the contractors and the performance and how responsible clients should be. It'll be very interesting to see the new regulations that have been passed or will be passed, I think, on construction and safety. It'll be very interesting to see where, in terms of the responsibility and the risk from a contractor point of view on contracts, the risk that now also has to be taken by the client. It will be very interesting to see how that is going to pan out. In terms of the private sector, remember the private sector is 70% of the demand in Gauteng, if you are in that space. If you look at it, not long ago, in the peak of that 2007, 2008 run-up to the elections, in Gauteng, the value of plans that were passed then was over 100 billion. I'm talking real terms. Over 100 billion. That's bigger than everything nationally that are being passed at the moment. That's the size of the construction industry, or the size of the private sector then. Gauteng only had a 20% share of that, half the size of Gauteng with about 55 billion. And then we've started seeing this after 2007, 2008, following the financial crisis, and then everything that came with it. Confidence levels have just plummeted. And everything Craig said about sentiment, policy, to me there's two things. If you cannot afford it and you have no confidence that it is the right thing to do, you're not going to invest. Even if you think it's the most amazing thing, you have confidence, a Hilux is a Hilux, but if you can't afford it, you're not going to invest. Or you might think you can afford a Ferrari, but if you don't believe it's the right thing to do, you also not. You need both. You need affordability and you need the sentiment. When we had 80% confidence levels in this country, we're going back to that run-up to the elections, a business confidence of 80, we had a 5% average economic growth at that time. It is crucial to get that restored, and this is why we're seeing this kind of numbers. I mean, Gauteng is at a 3-decade low in terms of the value of private sector plans that are approved. And we know there's a lot being done in terms of investment summits, etc. But for the first time in history last year, we saw the Western Cape overtake Gauteng. The June numbers it was the May building plans passed numbers was released yesterday, and the Western Cape was up 78% in year-on-year for the month, and Gauteng was still down by 4%, at least not the rates that we've kind of saw, but is still depressed by comparison, and especially the housing market in Gauteng over the last 12 months. One upside, looking for a growth opportunity, at least multi-unit housing developments now in May, there was a 28% increase. Could that be the start, perhaps, of more developer-driven? We know in the Western Cape we're struggling to get those developer-driven projects off the ground. That's also in the red for the Western Cape. Housing is really an issue in terms of land costs, affordability, etc. But because prices are increasing so high, and Western Cape sitting at almost 8 to 9%, a lot of people are saying because of affordability issues, they're actually coming back to Gauteng. And that can also now start creating more demand. So, beg your pardon. So what my point just is with this slide is not just Gauteng. A lot of provinces are struggling with the exact same issue. In Gauteng, we're now sitting over the last 12 months, or for I haven't got May data in yet, it was too soon. But as at April, over a 12-month period, Gauteng is sitting at about minus 11% compared to a 3% drop nationally. KwaZulu-Natal is just barely there. Northern Cape still doing quite nicely with about a 35% increase. And Western Cape is now just starting to go back into the black and sitting at 6%. Most of the provinces are under pressure in terms of private sector demand, but we are starting to see, because of lower interest rates and because of some improved sentiment that we saw first quarter. It didn't carry through to the second quarter, but once those kind of mechanisms start falling into place, it certainly will make a big difference. So all of what I've spoken about, we bring together in what we call a pipeline. So we know what the civil industry is doing, public, building, public, private sector, but to bring all of this together into one model to say, well, overall, in Gauteng, how has this pipeline changed? Now, we call it a pipeline because it's based on approvals. It's a project that was approved. It's gone through some sort of a process, but it doesn't mean it is necessarily going to be built, and the same with tenders. It has gone through. We do not use media statements. As I said, those can be misleading. A project has had to go through some or other authentication process to be in the pipeline, and we bring all of this together. It's a bottom-up approach, and it is real time. So we don't have to wait so long for the latest information. So from that pipeline, this is how the the Gauteng market is sitting at the moment. So the total value of that pipeline estimated is 43. Remember, tender value is a tender value. We don't know what the real value of that tender is, so that it can have a big impact, especially on the grade 9 projects. But it's an indicator. It's a guide to say, where do we think the province is going? The upside is the rate of decline has slowed. So we only now it's sitting at about -3%, the size of what we were, where we are at the first quarter compared to where we were this time last year. With that public building is the one that's coming up 22%. So there's a little bit perhaps more social infrastructure coming, which is critical. The civil side, however, we are seeing a contraction of about 11%. And in KwaZulu-Natal, it's this province showing the steepest decline in that pipeline. There are really some, and we were very excited about Natal at one stage, but falling quite dramatically. So overall, nationally, that pipeline is now almost 40 billion rand lower than what it was 12 months before. And a lot of that's coming from KwaZulu-Natal, with Gauteng just marginally lower by about 1 billion rand. And a slowing rate of decline. Western Cape's pipeline is down 2.8 billion rand, but coming off a slightly higher base. So there are many downsides, as you know, the decline in the public sector, civil, especially the civil, increase in postponements, slow pace of awards, late payments, our margins are under pressure, poor expenditure rates, etc. But let me end off on a positive note, which is the upside. We have got the building tenders that are gaining momentum. Tshwane, interestingly, is a hotspot for residential development, especially the central western parts of Tshwane. A 93% increase in approvals in that area, so there is areas where demand is growing. It does have the second largest pipeline. Operation Vulindlela, fixing municipalities, etc., very important. And then, of course, we have the investment summit that was surprising, 312 billion. Will that materialize into something more concrete? Hoping to get 800 billion. What it did show is that there is an appetite for investment in Gauteng. 312 billion is 5 times the size of the investment at the moment in Gauteng. It showed us that there is an appetite. It's getting the basics right, which is really the fundamental piece the fundamental piece of the puzzle that we really just have to get back together. And I applaud your MEC for infrastructure, that is basically the vision that he is working on, to improve infrastructure investment and service delivery in Gauteng. Happy Mandela Day. Thank you very much. Any questions? I can hear you.
Yeah, the figure you spoke about in the labor force of 350,000. I wanted to understand, because you spoke about the informal side of the industry. I wanted to understand, does that include the informal side? How do you arrive at that figure? That's the first question. The second question is the difference between the budget and the actual spending. You spoke to that difference. And what can you look into that to check how much of the actual spending that happens relative to the budgets that the metros have pronounced on. And the last issue, again, relates to two very important issues you spoke about. And I once again want to reflect on this with the CITB and management. We flag these issues because we want the CITB to care about all the constituencies of the industry, but most importantly, the contractors, because we're always getting the raw end of the stick. So the first issue deals with the report that National Treasury has released on the delayed payments, right? And you've seen that report. There's an increase in terms of what government owes service providers. The bulk of that sits with this industry. That's where the bulk of that money is, right? Now, from the regulator, which is the CIDB, these reports have been released every year. Annually, these reports get released either by National Treasury or by the other department. I just forget the name of the department, which is supposed to crack the whip on these things. Now, our view is very simple. That is actually not a true picture, because those figures are what the HODs and the DGs are disclosing. That's not the real picture. The real picture is more dire than that, right? I sit on a board of a company that is owed 200 million rands by government. We have to make a decision to close the company. But there's absolutely nothing coming out of the CIDB as the regulator to say, what can we do to make life easier for the construction industry and for contractors in particular, and also our professionals, because they also get affected by the same thing. So this is where we have a problem, that we are given data on a continuous basis. We're supposed to use that data to regulate, but we are not. It's like the CIDB is just a spectator waiting for a catastrophe to happen, right? On the other matter of cancellations, we in fact lobbied the CIDB to do a study on the impact and the cost of cancellations. Now, you've just said it yourself, it's not me. There's been an increase. Yet there is absolutely nothing happening in terms of how are we regulating that. We have proposed that we must pay it, because we are spending actual money. This is not monopoly money that we are paying to respond to tenders. We are actually incurring costs.
Yep.
Now, cancellations are on the increase. I want to ask our regulator, what are we doing about that? So we are meeting every year, we are meeting every time we are meeting, these issues are being presented, but there is nothing happening from the regulation side to make sure that at least the environment is conducive for all of us to play. At this rate, we are owed money. At this rate, tenders are being cancelled. It's all costs that we are incurring.
Yep.
And nobody, including our regulators, is doing anything about this thing. How? We must close the CIDB, I think. No, I think we must close the CIDB. There must be something else that we put in place. No, we must do something. Yeah, no, if we don't agree on closure, we must do something. Something must happen. We can't have this kind of a situation. We can't. We simply cannot. I sit on about 1,000 families are going to get affected. 1,000 families are going to get affected. And we're going about as if life is normal. It cannot be. It can't be. This is wrong, colleagues. It cannot. So CIDB must do something. Something must happen. Something must happen. Thank you very much.
Thank you very much. Well, I'm not going to answer on the CIDB's behalf, but I do think that, the issue could also within the different clients and understanding where those cancellations are and why those cancellations are there. Is it tenders going out without actually having a budget to pay for those tenders, and subsequently that leads to postponement and cancellations? Is it zoning issues that, the retirement home now that I heard in Gauteng, 55 million rand spent, there's nobody in there, they're maintaining it, but it's got a zoning issue, so nobody can move in. It depends on what, and I think the cancellations, is a serious problem. Companies are closing, families are losing homes, especially on the payment issue as well. But I think a lot of more research needs to be done on that. So on the labor force issue, do you want to, can I?
No. Elsie, I just wanted to say, don't defend the public sector, please. Your job is not to defend people who do wrong things.
No, I think detailed research is necessary.
No. The CIDB has done research, Elsie. If you have not had sight of it, they must give it to you. Okay? Research was done. That's what I said. Research was done. I'm not talking here because, this issue is affecting us. We have not looked into it. The CIDB did research into this issue. Okay? Right. So, as contractors, let me explain to you. As contractors, when the project is advertised, we assume everything is in place. The planning is done and the budget is available. We can't have people say, no, we have advertised, but the budget is not available. How did they advertise when the budget is not available? Great. How did they advertise when the planning side is not done? You can't go out and there's still a land issue, that you have not secured the land, or there's a land use issue that must still be addressed. No. By the time you advertise, everything should be in place. So let's not defend people who are doing wrong things.
No,
please.
I agree. Every local government, every provincial government, every national government, that is the reality that should be there. And that is exactly what is necessary. And why the different MECs in infrastructure, for example, Dean McPherson and Martin Meyer in Natal, and also Mama Bolo here, those are the kind of things that they also have to make sure happens. On the labor force, we don't do that survey. It's Stats SA. They publish those numbers. They do include the informal sector, or let's say the formal side of the informal sector, the part that we know. At a national level, the informal sector in construction is now at 40% that we know. We don't know what it's like at the different provincial levels, and it could even be bigger, because part of it being informal is that it's very hard to track. On the spending of budgets, I think, Ntando, you're dealing with the actual spending of budgets, so that is going to be addressed, your question in terms of exactly how metros are spending. We do have the data, but I don't want to steal the thunder of Ntando.
Okay, thank you very much, Elsie. Do not worry, I'm not going to ask you a question. I'll just make a comment to everybody who is interested. I think for me, this failure to spend on capital budgets by government, though we know the biggest culprits are the municipalities. It's an anomaly that has gone for far too long, and it has kind of become normal. It has become acceptable. It's something that should not be acceptable at all. And my view is that perhaps one of the ways to arrest it is to take an advantage of the impending the Public Procurement Act regulations. I think we should embed it in the regulations so that it's dealt with the very same way that we deal with other aspects of supply chain management, because it's a procurement failure and it has to be corrected in the procurement prescripts. So I understand that there are a lot of role players that have got to play their game to assist us in dealing with this. But I think if it can be embedded in the regulations, it will assist us a great deal, because you can't have a situation where we are battling as contractors, there's not enough work, communities out there do not have these infrastructure spaces, libraries, schools, and so forth. And yet we have got monies with people that are supposed to be making sure that those are expedited, but they are sitting with this kind of monies. The sector has, on several occasions, indicated to government that we do have capacity and we can assist you. But the government hasn't been willing to take a bite in that kind of commitment that has been made by the industry. So my view, colleagues, is that perhaps in our little corners, wherever we are, we must make this input so that we embed this in the regulations and see if it cannot assist us, because if people are there, they're supposed to be dealing with this. These people are supposed to be, technically skilled to be able to deal with these programs, and they are not. The systems should be able to flush them out, and we get the people that can do the job. That's a debate for another day, but my debate and input is that perhaps we should consider embedding it in the procurement regulations that are yet to be promulgated. Thanks.
I think that will, one more question.
Can you hear me? I noticed my VP was quite livid with this non-payment issue. Okay, I've just captured two percentages, Elsie. There was this one of 1.4% profitability over a period of time. And then the other one was this 84% late payment. I'm not too sure is that over a period of time. So those for me are quite worrying. We can't speak about making South Africa a construction site, growing the economy, when you have those figures. I'll then maybe make a suggestion as to how do we deal with that. The second one I wanted to check, when you were showing the increase of your grade 9, you had that graph where it shows, I think the yellow was imaging, and then I think the blue was...
the contractors, the number of contractors.
Yeah. Now, I wanted to find out maybe, how do you define imaging and how do you define establish? Because they are all at grade 9.
Yes.
So for me, it's very interesting. People are already at grade 9, but some of them are imaging. so that would be the second thing. Now, the other issue about the National Treasury cutting budgets, I think we should, maybe the research should then link it to, because the common cause of cutting budget is where the money is not being spent. I'm a conservator by profession, and I can tell you many projects that fail because there's no spending, there's no expenditure. And there's a whole reasons why there's no expenditure. So I think it's not just, the statement needs to be couched properly to say National Treasury is cutting budget because of what? And we need to come with mitigating factors there. Now, I was quite impressed when you did the projected Gauteng province, pipeline of 43 billion. And I think the figures are talking correctly because Gauteng portion was sitting at, the public sector was sitting at 22% of that, which makes sense.
Yes.
I think when you started talking about the private sector, public sector of 30-70.
Yes.
And I was saying maybe we need to consult that because the 2015 property sector charter council report showed that the residential market was sitting around just under 6 trillion, whereas the public sector one, all the state-owned entities, public works combined were sitting at 200 billion. So I just thought we need to align that things correctly. And that percentage budget spent that we're showing, to say how things spending so much and so much, so much. I just wanted to find out, does that include or exclude the private sector? Because I'm sure if we factor in the private sector, the picture will be slightly different. Thank you.
Just on the last one, I didn't quite understand. It's the percentage of budget spent from the metro.
Yeah, I think you made a
But
list
that
of...
would just be public sector spending.
Yeah, I think you mentioned, the metros, Joburg, Tshwane, and Ekurhuleni.
Yeah, that would not be private spending. That would literally just relate to the budgets. On the budgets that are being cut, if you look at the National Treasury budgets, nationally, it is in decline. And it is in decline for the next 3 years. It was in decline for the last 10 years. The growth is in your energy, your transport, your water. That is where the economic infrastructure is going at the cost of social infrastructure. And that's why I'm saying specifically on social infrastructure, because that was a bit of a focus point for the presentation, where you are seeing budget cuts. I think Gauteng's budget was cut by 400 million rand last year. Because of underspending, true. Luckily, so far, it looks like they have actually spent the 24-25 budget. If you're in Northern Cape, you should be worried they spent only things like 17 or 20% of their human settlement budget. So, there's a lot of moving parts that we need to look at in terms of spending. But I don't want to go into too much detail with that. Is there a question I missed?
Yeah, no, it's fine. Just a comment to us as CIDB. I think most of the facts raised in the research points towards us as CIDB. If you look at that D in the CIDB, it's got a different color. And there's a reason why it's got a different color, because when you read the CIDB Acts about development, and I think that's where we're missing the point. Now, the Act make reference to the CIDB must establish a register of contractors. That's this side. And the other side says it must establish a register of projects. And you need projects to be able to deal with all these issues here. And absolutely. I don't think, in fact, I suggest that the CIDB moving forward must really look into that. How do we enhance the register of projects to address all these issues? Thank you.
Absolutely. On the emerging and established, just as a final point, that is actually how it's being coded on the CIDB contractors register. They are flagged as emerging or established. Or they are flagged as emerging if they are emerging on grade 9.
Or even if they are 9 and they're flagged as emerging. Very interesting.
Yes. Thank you.
Thank you very much, Elsie, for that igniting presentation. And I think this is exactly what we want to get the conversation going. As hard as some of the conversations are going to be, but we need to first have those hard conversations, blame the economists, and then eventually thank the economists. CE and maybe Mr. Makanya, if you could come in and speak on the CIDB side. Thanks.
Let me start. No, but everyone who's asked the question must be in the room to get the answer. I think it's quite important because one of the colleagues that had asked the questions also. Oh, yes, you are here, Prapol, and you are here. Gregor also asked the question because we must get the answers and debate whether, because that's the purpose really of these kinds of discussions. He's going to call the client to follow up. Yeah, no, the issue of non-payment is really one of the major issues that the industry is facing. And as a CIDB, based on what the industry had requested, to saying even when you search, you try to litigate that one to get your payment, it becomes too costly, too time consuming. Hence, there was a proposal for the establishment of the ombuds that is going to deal with those types of issues and not make it a lengthy litigious process. And with the industry, we developed the business case for that, the feasibility studies, and then industry were able to comment also on that, and then it was presented alongside with the CIDB amendment bill to saying it could be a more effective. And the way that the ombuds was being structured is that it will also have a lot of, because Gregor is also correct to saying sometimes it's also not the complete true picture, because you'll find that when you've submitted your invoice, for someone to say they've paid you on time, they'll get proposed to saying, just change, now it's not 1,000 rand, it's 999. And then it goes back, your invoice gets rejected. So the idea of the ombuds was also to saying it will have built environment professionals that will also understand that all these payments are interim payments. You will always do final accounts and those kinds of things, as long as it's still in a reliable and correct ballpark figure. So that is one of the solutions. But the criticism again against the ombuds to deal with issues like issues of tender issues, payment and all that, because we've had other interventions as a country to try and deal with this issue that has not fully resolved this, was that are we creating another institution that is going to try making it more bureaucratic, basically, that is going to try to do something that ought to be done by other departments. But on the Public Procurement Act, also what complicated that stuff is that there is also an ombuds that is being proposed there to deal with disputes in construction. The idea from the CIDP's perspective was that we must not make it easier for client to not pay you. Rather than you take them to court and incur cost, they must go to court to argue against a finding of an ombuds saying, this payment has been overdue for so much, just pay. Simple as that, you see. So that's what we were trying to do around that. But it's really one of those chronic issues that are affecting the industry, and we are hoping that we can get approval to proceed with the issues of the ombuds. Tender cancellation, again, is another issue that is making costs. We've also proposed to even other clients to saying, maybe you ought to be paying people for their efforts. I'm a former consultant where you can easily spend 500,000 working on a bid on those complex projects. And then when it gets cancelled, because I can tell you now, it will take senior resources, time, sometimes preliminary investigation, so that you can come up with the right pricing strategy. So saying, maybe people ought to be compensated for those that are eligible, for instance. And then the clients are saying, on the other hand, also for this frivolous, because also those that are in the industry will know there's virtually no large tender now that is not litigated on. As Sandral, as Randwater, as Umgeni Water, all the large tenders, that's also one part of the reason why sometimes it takes so long to award, because there's a lot of litigation in the sector. Okay, also for those frivolous lawsuits, also if the industry is also going to commit to pay us back for lost time and others. We've seen projects that have been delayed by the years just purely on litigation. And it's a complex issue because you also want people to have the right to exert their legal rights if they see there is unfairness. So that was one of the issues that also on the ombuds we were proposing as one of the scope, was that it could assist to quickly litigate, to come to decisions on those kinds of issues where the issues are relatively simple. But it's one of the issues that are really stalling on projects. There was also a question around also what can be done to deal with issues of tender cancellations. Through the Centers of Excellence and the CIDB, we've also done research work on how one can use blockchain in the procurement process, because there's also a lot of interference that happens during the procurement process where tenders are being cancelled, and it came out in the research because of other interventions that are outside, but they just never get reported to the CIDB. Clients and contractors, unless we are fighting about Brapol's company was a grade 2, now they are a grade 4, they won't also report all these other transgressions that are covered by our code of conduct where we can act. Because during the procurement process, the CIDB, if there's irregularities, we can deal with clients, we can deal with contractors. So it's quite important in our industry to be active and give us the specific cases that we can deal with from both the client and the project side. Also, the issues are around social technology can also play a huge role. We had a modernization effort as a CIDB that we were proposing for the construction industry to just go fully online, because there's a lot of money that gets wasted where reference letters, certified documents, and all those kinds of things. And all of those things require a lot of human intervention to guide, but the public procurement bill also had an aspect where the public procurement office is saying they will establish digital platforms for that. So we are working with other stakeholders also to see how best the construction industry can benefit from that. And then the two issues around budgets, I concur, there are two problems here. One, you do need additional investment in infrastructure, and hence there's huge drives around public-private partnerships and all of those, because the fiscal will just not cover all the needs currently if we look at some of the infrastructure people. But the more cardinal sin that happens is when there's non-expenditure of budgets those that are approved. And some of the reasons have been raised by yourselves around issues of delays in awards and all of those kinds of things. And we initially as a CIDP, when we were the past few years, we looked at this issue as an issue that is issues that was only at local municipalities. Hence, you'll see a lot of our efforts around infrastructure delivery management systems, capacitation sessions, and guidances was focused at that. And if you look at the data, municipalities, especially local municipalities, are the ones now that are really around the 100% mark in terms of infrastructure budgets. Now, those that are struggling are those that we always thought had lots of capacity, provincial government departments and all that. And it's also those issues regarding, the interferences in tendering systems and all that. There's also been quite a few comments that have been raised online, and are really also centering around what we are discussing here. It's issues of cancellations and all that. Last but not least, one other important development that the CIDB is working on is on issues of performance reports. The reality is, for those that have been in the space for a while, they know, if you also don't have a competent client, you will never be able to deliver infrastructure. There are specific skills that you require in SCM for delivery of infrastructure, your technical services and all that. So we also need to rate clients. As much as we are proposing performance reports for contractors, we need the same for PSPs, we need the same for material suppliers, we need the same for clients, so that we can have a holistic view. Because it's always easier in other platforms. Contractors are blamed in other platforms, clients are blamed. So CIDB as a regulator, we need to gazette those. Those are in development. We are working also with our centers of excellence so that there is a proper record on who has performed how and a proper system of dispute resolution mechanisms on that, because those will become permanent records. I see Doc is, do you have an input, Doc? So also we are expecting the industry to not jump up in arms when we are gazetting those reports, where we'll be measuring performance of each and every stakeholder in the sector, because it becomes important information. There are clients that ought not to be procuring for infrastructure because they just don't have the capacity. So as much as we measure contractors, we also need to measure clients, are they paying on time? Those kinds of issues that are really collapsing our projects. That's really the input I want to make on those questions that have been raised now. And I'm just going through the chat again to see if they are different. Yeah, but the questions were centering around that. Thank you very much, colleagues.
Thanks. Thanks, CE, for answering some of the questions, and thanks, colleagues, for actually asking the question robustly. That's why we call this forum. As I've indicated, to a greater degree, I come from the client base, because that's where I've been for the past 30 years. So I will also know some of the challenges from the other side, from the client perspective. I think the colleague that commented last, he said we need to regulate this thing, which I do agree 100%. Some of these things need to be properly regulated. You're well aware that in terms of the Procurement Act, the bill itself, as CIDB, we're not comfortable with the manner in which it was driven, because we felt we're supposed to play a bigger role than National Treasury, because we believe that we had a lot to input, but obviously it went the way it went. We ended up being the participant, just like others, not leading it, because we are of the view that we're supposed to lead it. There are a number of other issues as well that are supposed to be embedded in. As a technical person that has actually led at the municipal level and at the water board level, I still believe that we need to be assisted by the legislation in terms of even how the committees are even structured. Well, some of us are of the view that some of the cancellations and some of the wrong evaluations are based on the competence of the people that sit in those committees that we have no control. I mean, as a technical person, I've always complained that people that are sitting in those committees are not technically competent to evaluate those tenders, because the committees, in my view, obviously I'm a technical person, in my view, those committees are supposed to be flooded by technical people. You need technical people that have technical expertise to be the one who are actually saying whether those things will work or not. But the reality out there, we are outnumbered when it comes to that. And sometimes, I don't know how many times as a head of the technical department I've said, but the committee does not understand. It needs to be made to understand this and that is meant to be measured like this and that. But it falls under that category as well of actually saying maybe we need to legislate a number of these issues. Yes, Bongani, you've touched on critical issues as well in terms of capacitating the clients. We normally say in some of the municipalities, when it is being said in general that in some of the municipalities, they don't even have a single engineer, but they have a lot of these technical projects. Even if you can regulate it, if you have incompetent people overseeing those things, it's not going to work. Unfortunately, that's where we don't see it as CIDB. I'm saying this from the experience sitting at the client point of view. Yes, I mentioned to you that I work for a Tegwini deliberate so that you know that I know the problems, because that's where serious problems are, including relating to construction. So I've made a lot of noise where my heads and myself, we're not sitting in committees, but we've got 60% of the budget of a Tegwini, but we don't sit in those committees. My head and other senior people are not sitting there. Junior people sometimes who come from other unit except the technical department are looking at these tenders, and I'm accountable for expenditure, but someone who has no clue whether the tender is cancelled or not, it is not on his performance. In my previous life as a CEO, I ended up in a performance contract of everyone that is involved with the tender. Everyone was measured on the performance of that. If it's taking longer, they were all penalized. Not only the technical people that are supposed to deliver the project. If the project is not performing because it was delayed at the committee level, the committee was being penalized. But obviously that was when I was in charge. In most of the instances, we report to our colleagues who are accounting office, particularly at the municipal level. We will report to our colleagues that are neither accountants, neither engineers. I have no problem with colleagues who did general, I have no problem with that. But sometimes those are the people that are accounting officers that make such serious decisions. So it is vitally important when we're saying local government is not properly capacitated, that we know the implications of those. I was talking to colleagues outside to say, at the time when I was a CEO of a water board, CIDB used to present in my stakeholder engagement. I used to call them and the SARS as well to engage with the contractors, because predominantly it's contractors that are actually used by these service providers. I was in Tegwini for almost 5 years, but I don't remember CIDB presenting there, where there are bigger budgets, where there are bigger problems. But obviously there is that mentality of metros where they assume to be, I know it all. Because of, which is another problem as well. Some of these clients, they don't listen and they don't invite you, they do their own things. Yes, there are other issues as well that actually contribute towards the cancellation, which we need to be honest about it. I will not be doing justice if I don't touch on this. Sometimes projects are just cancelled, just because the person that is earmarked is actually not meeting the requirement, rather than going ahead and then get a reason to cancel. In fact, I was once suspended for that, where I was actually saying, I'm not cancelling this. That one is off, we're continuing with those that qualify. Those are the realities that are out there. That's why it's important to sort out local government and the delivery departments, because we've got a lot of challenges there. In some of the instances, I'm glad that I've seen a number of them, a number of cases being won by contractors, particularly in Tegwini. By the way, if you are reading the papers, there are a lot of them where the contractors are winning the cases, mainly because the spec is correct. But when it comes to evaluating the specs, people are going against that for other reasons. But I will still encourage contractors to do what, I know it's a little bit of a challenge and unfair to say go challenge it in court because we incur the money that we do not have because we are not paid. But I've seen a lot of these contractors. In fact, the last one in Tegwini, it went even to constitutional court, whereby there was unfair cancellation. Because the document was correct, it's other processes that lead to the cancellation when the documentation is correct. The judges have been favoring the contractor as in the outcomes. I think one of the issues that were raised by Honorable, our Deputy Minister, while he was still a minister at the time, he actually tasked us to start looking at the cancellation because they seem to be. He said it is one of the focus that we need to be focusing at the time when he was a minister, because it is true. A lot of money is wasted there, because if you really look at the real reason why we are not spending, it is actually related to what has been said. Round about the issue of budget cuts, round about the issue of budget cuts and delays in awarding, which include even the cancellations. Of course, I will not be doing justice if I don't say the other part, because if we are sitting with the client department about CE, they complain about the caliber of contractors that we are giving grade, which as well is another cause of cancellation as well, whereby someone that does not have a capacity, sometimes it's people that are regarded as developed contractors, that when it comes to performance on the ground, the performance seems to be something else. Again, we get to be lambasted by clients department to say, how did you provide such grading if the failure is this much? Because obviously we come in there again as CIDB. I think we are noting the concerns because I would like to emphasize, especially to colleagues that are online, that we are not answering all the comments. There are a number of them. I was outside there. Some of them we will actually answer them online. So we just picking those that probably some of them because of time. Thank you.
Thank you very much, CE and Mr. Makanya. So it has come out quite clear that we are facing an emphasis on we as the industry. We are facing an array of challenges, and from contractor performance, from project management issues, expenditure, but it's a we problem as an industry. And I think it's very important that as CIDB, we are starting these stakeholder engagement, taking on our stakeholders on board to say, what are the problems? And then when we solve a problem, it's a we problem. It's not a he problem, it's not a she problem, it's not that organization problem. So, and thank you very much to our two external strategic partner speakers for the very igniting presentations, and we are going to move on to a very shorter presentations between 3 internal colleagues. They're going to be very led by a very young chap, Mr. Ishmael Cassiem, just to come and introduce the monitors that the CIDB develops and what these entail, and then after that there will be Ms. Ntando Skosana and then Mr. Pumelele Qongqo. Thank you very much, colleagues. And just on another note, if you've lost Nissan keys with a lot of key holders, please come and talk to me. Thank you.
Thank you, Leboha. Good morning, good afternoon, colleagues. My name is Ishmael Cassiem. I'm from the CIDB. We've heard from the 2 previous speakers the global macro view, also the provincial view. What my colleagues are going to talk about now is about the monitoring reports that the CIDB publishes on a quarterly basis. We've heard earlier this morning from the 2 speakers, particularly from the BER, the SME Business Conditions Survey. That comes out on a quarterly basis, and it reports, as you heard, on contractor sentiments on their business conditions, which includes, for example, the constraints, profitability, and other things. The CIDB also publishes the construction monitors. That's on a quarterly basis. One is the transformation report, the other one is contractor development report, the third one is the employment report, and the last one is the supply and demand. Now, in terms of the demand, we've heard Elsie speaking about the projects, the demand side, the number of contractors, whether there's enough work for each contractor, and the competitiveness, which deals with the profitability. And one of the colleagues will speak about the spending of the budgets, which we've heard about. And these we get our insights from our CIDB register of projects, which you've heard earlier, which we can do better, we can enhance it, and also from industry insight. And the second one, we'll talk about the supply side, which is linked to our CIDB register of contractors, and that deals with the sustainability of construction companies, transformation of the industry, as well as development. And then he will then also talk about the build program when we talk about the development side. Thank you, colleagues. Thank you.
Thank you so much, colleagues. In the interest of time, I'm not going to go into all of my slides. Some of the things that have already been discussed, I'm just going to emphasize on the role of the CIDB in relation to the data that we get from the construction monitors and also issues of underspending. So I'll be focusing on the demand side. I'll be focusing on the demand side issues, which will be dealing with municipal capital spending and also overall public sector infrastructure spending, and how that actually impacts on the constraints that are faced by contractors on the ground. And I won't go too much into issues of employment because I just want also just to save time. As Ishmael has already explained in terms of where do we get the data, the CIDB produces construction monitors on a quarterly basis. So the issues that I'm going to be talking about in relation to demand come from the supply and demand construction monitor, which is the publication that is published on the CIDB website. This one was published at the end of April 2025. Okay. In relation to municipal capital expenditure, the problem of underspending, we know that as Elsie has already gone into the issues of underspending. Sorry, I'm just struggling to see my presentation there. My apologies, colleagues, for that. So in terms of municipal capital expenditure, firstly, this is looking at the national picture of municipal capital expenditure. And for the 23-24 financial year, it is seen that total capital expenditure was 61 billion. And in terms of the percentage that was spent by all national municipalities, that was 77% of the total budget that was spent, which now translates to an underspending of 18 billion. Now, if we go into the different types of municipalities, the districts, they spent 83% of the budget. The metros spend 78%, and then the local municipalities spend 74% of the budget. Now, when we focus on Gauteng, now we're looking deeper into the expenditure within the Gauteng province. You can see that 11.5 billion was spent by Gauteng municipalities, of which 84% of the total budget was spent. Now, this is an underspending of around 2.5 billion. When we drill into the municipal type level expenditure, metros, they spent 84% of the budget allocations. The locals spent 85%, while districts spend 41% of the budget allocation. Now, as much as districts, they spent lower in terms of their expenditure, they've got smaller budgets allocated to them. So when metros, which have around 9.8 billion of the budget, when they do not spend, it has a bigger impact on the industry. And then when looking at the overall picture of all the municipalities within Gauteng, it was seen that only 4 out of the 11 municipalities spend above 80% of their budget. We also look at public sector infrastructure spending. Now, on this, we've got a publication that was produced by the CIDB, which looks at the analysis of public sector infrastructure, looking at all tiers of government. Now, these include state-owned companies, it includes public entities, national departments, provincial departments, as well as municipalities. This is only focusing on infrastructure expenditure. So it's excluding, the previous one that I was looking at was capital spending, which also includes equipment. This is drilling into the infrastructure and expenditure. And when we're looking at the municipalities here, we can see that in the previous financial year, which was the 23-24 financial year, there was an improvement in terms of expenditure from 74% in the previous financial year. However, as much as there was an improvement, there was 15 billion missed opportunities because of the underspending. Now, when this underspending is happening, it has an impact on the demand on the ground for contractors. It has an impact on the jobs that are created within the construction industry. So it has a direct impact on contractors. And in addition to that, municipalities have infrastructure grants, and they only spend 67% of their grants. And now this, in terms of underspending, this was 12 billion, which was underspent. So combined, when we combined that together, we've got 27 billion underspending, which this is 27 billion of missed opportunities for demand, as well as employment and contractor development. What is the impact of underspending? Underspending has an impact on service delivery, and it also impacts on the construction pipeline, and it has an impact on the confidence of contractors, not only contractors, but consultants, all the institutions that are involved in the value chain of construction. So the focus here of the presentation, we are focusing on the demand that underspending has on contractors. What we've also noted, I think this was also actually already discussed, that there's a capacity issue within within municipalities, and capacity varies within different types of municipalities. So other municipalities, they lack engineering capacity, and they also lack the capacity to oversee construction projects, which then leads to this understanding that happens within the municipalities. So as the CIDB, it is important for us to contribute to building that capacity within the municipal entities to ensure that we can improve spending within the municipal sphere, as well as this is very important because it has an impact on emerging contractors, because we find that some of the small and medium contractors get all their projects from the municipalities. Therefore, if there's underspending that is occurring, it has a direct impact on them, and now they are not sure in terms of the projects that will be coming out from the municipalities. The report also looks at provincial budgets. So from the report, this data, we get it from the National Treasury, and the data shows us that between the provincial departments and the local municipalities actually have just above 50% of the infrastructure budgets. So it is important in terms of enhancing the multiplier effects within the industry. It's important for the planning within the municipalities to be enhanced, and it is important for CIDB to support procurement management within the municipalities, and to also support the client departments in terms of contract management. This is going to lead to multiplier effects, and it's going to unlock a lot of projects that are based within the provincial departments and the municipal budget. So for CIDB, it's important for us to support that procurement capability and to help support contractor development. Before we get into the business constraints, it is also important to note that within the state-owned enterprises, there were also issues in terms of underspending. So the state-owned entities, they account for 30% of the total infrastructure budget, and they only spent 89%. So state-owned entities for the 23-24 financial year, they had a budget of 85 billion, and they only spent 75 billion of that budget. So when underspending happens, even within state-owned entities, even though they spent 89%, there was 10 billion that was not spent for the SOEs, which has a ripple effect on the growth of the construction sector demand. The national departments, they performed slightly better, but the national departments have a smaller portion of the infrastructure budget. They've got around 5% of the budget, and they actually spent 91% of the budget. There were other entities that actually performed better in terms of their spending of the infrastructure budgets, which are public entities. They spent 98% of the budget. And then triple Ps, they spend 100% of the budgets. So within public entities, I think SANRAL controls the majority they have a significant portion of the budget. Craig has already spoken about the survey that CIDB does. So in partnership with the BR, the CIDB does a survey, and one of the issues that we look at is the constraints that are faced by contractors. And I'm going to align the key constraint that are faced by contractors, which is insufficient demand. So the reason that we're speaking about this constraint is that this constraint is actually affected by spending that happens in the public and the private sector, as well as underspending that happens by the public sector. So when we're looking at the different firms for the grade 3 to 8 contractors, the survey has already shown that that across nationally, the key constraints, when you're looking at the average of all the constraints, that nationally, insufficient demand has been the key constraint faced by contractors. So contractors over a long period have actually been saying, you know, our major problem is insufficient demand. And this is across all sectors, all provinces, and across all firm sizes. And this is affected by the demand within the construction sector, and it's affected by the investment by both the public and the private sector, as well as underspending by government. What I actually want to emphasize here is that every rand that is not spent by public sector, whether it's all the different spheres of government, every rand that is not spent, it has an impact on the delivery within the sector. It has an impact on employment as well as growth, and therefore, as a sector, all the stakeholders in the sector, we need to find ways on how to rebuild this construction demand, and we need to find a way of fixing this gap between funding and find a way to actually convert that into actual spending that happens on the ground. In terms of Gauteng, as I've already alluded, the fact that there was 2.5 billion that was underspent in the previous financial year, and this has an impact on contractors. And the other issue is that you know, the smaller contractors within within the sector actually rely on this demand from the municipalities. Therefore, when the budgets are not being spent, it has an impact on them. Gauteng has an immense delivery potential, but to unlock this particular demand, we need to improve in terms of the execution of the budgets that we're spending, especially at the local level. Okay, yeah, I've already been warned in terms of time. So now I'll be looking at the employment within the sector. So the sector employs 1.2 million, and Gauteng alone actually accounts for close to 27% of the total construction employment. On a quarter-on-quarter basis, there were 6,000 jobs that were lost within Gauteng, but on a year-on-year basis, 43,000 jobs were gained within the sector. There is another indicator in the employment in the survey, which actually measures employment in terms of contractors. What are they experiencing on the ground? Are they adding jobs within the industry, or are they shedding labor? And what we've seen that in the long term, that particular index has actually been negative over a long term, which shows that jobs have been lost. Contractors are actually not adding any jobs. They're not keeping any labor within their companies because they are actually impacted by low demand. And as we know, underutilized budgets translate into underutilized labor. Okay, so what does this mean for the CIDB? The CIDB, before we actually get into what this means for the CIDB, there was an analysis that was done by the CIDB. This analysis was done, it was a research that was done by Quantec, which actually was trying to quantify the impacts that underspending and spending has on the sector. And this research actually found that for every 1 million underspent by government infrastructure, it leads to a lost output of 1 million, and it also leads to 3 million output loss across the wider economy. This is because of the multiplier effects. And it also leads to a loss of jobs. 4 jobs are lost if there's an underspending of 1 million within the sector. So what does this mean for us as the sector, both, especially for us as public sector infrastructure clients and for us as industry enablers? We need to be very, we need to play a role in terms of having performance-driven clients, because this is very critical for the sector. If clients are performing well within the sector, they'll be able to execute all their projects and they'll be able to spend their budgets efficiently. And they will not only be advancing service delivery, but they'll be actively driving GDP growth, unlocking infrastructure investment, and creating meaningful work opportunities for individuals and contractors alike. Thank you.
Thank you very much, Ntando, for that presentation. We are going to move on to the last one, colleagues, and then we'll take a joint Q&A after the last presentation from Pumelele. Thank you.
She has it. Good afternoon, colleagues. Like they always say, save the best for last. Before I speak transformation, what's the other presenters were presenting, I received an anonymous message directed to Uncle Paul and But Craig Lemboe. And the message reads, please be nice to the presenter. This is the outlook of my presentation. As you all can see, Praish has already spoken about the monitors that the CIDB produces, and I will be focusing on the contractor development and transformation. This is a publication that comes out every January, looking at the preceding 4 quarters of the calendar year on transformation. I will start with the built environment professions. The publication includes information from the CISA website, which encapsulates the disciplines of engineering professions. That will be electrical, mechanical, and the like. And how they structure their empowerment classifications, they use the construction sector charter code. What is it? Classification. Basically, for micro enterprise, the amended construction sector codes categorize as an exempted micro enterprise of less than 6 million turnover per annum. As you can see, qualifying is between 6 million to 25 million, and large greater than 25 million. So what we've done, we've taken that information, filtered the ownership to companies that have black ownership greater than 51%. And this is the chart that we have, this is the result rather, as at January 2025. We see many black-owned companies at 50% in terms of ownership. In the consulting engineering space, I see that quantity surveyors are here as well. We would like to sort of collaborate with you, get such information, architects and the like, so that we sort of beef up the built environment professions reporting on empowerment or transformation. Now, when we talk contractors, the CIDB is intentional. Those are the words that my CEO likes to use. We're intentional about transformation. In terms of our approach, we're looking at a 90% or more in terms of capacity. When we talk capacity, we talk clients, we talk BEPs, we talk contractors. And that value of the work, of the industry, that would be 90% black-owned, and the value of the work that goes out is 90% going to the targeted groups, empowerment groups. That would include women, youth, and the like, so-called HDIs. So that is the CIDB's approach to transformation. And now, about 10 years ago, 2014, the picture was a bit different. As Elsie alluded, that there's an increase in grade 9s, and I've sort of skewed my presentations to focus on grade 9s. Around 10 years ago, 2014, the picture was different. It was more like a triangle. It was skewed. But now I can see that 10 years later, it's getting to sort of align to the other grades, smaller grades. So there has been an increase in black-owned grade 9s. And with my experience, I've seen how you attend workshops like this and conferences like this, there would always be that question of, when do you see a black-owned grade 9? Voila, it's happening. The jury's out, though. When we talk about women-owned, I must also emphasize that we talk about 51% or more in terms of the shareholder ownership, not necessarily equity, but shareholders. We see a value of an average of 36%. Companies that are on the CIDB register, active women-owned contractors. In terms of youth, it's in the region of 12%. Now, contractor development is another publication that comes out around July. Second quarter differs. Some people see that it's the first quarter, but like second quarter of the calendar year, which is July. We're looking at issues of upgrading of contractors, contractor development and the like. When we say contractor development, we are focusing, a special focus on contractor development programs that are implemented or clients that are implementing contractor development programs. In terms of the total number of contractors that are upgrading, ladies and gentlemen, don't be confused by grade ones included here, because the number of grade ones is a bulk of the registration, which is like a lot. I'm sure by now there are 200,000, I don't know. But here, the average, if you remove grade ones, in terms of the from grade 1 to these other levels of grades, the average per annum is around 9 to 10%. And it has been that way for the longest time. But when you have grade ones there, you see that it's around 4%. Same applies for black. Remove grade ones, you get a different figure, around annual upgrade of 6%. For women, if you remove grade ones, 4%. And lastly, youth, if you remove grade ones, 2% of youth-owned companies upgrading on the CITB register. Now, let's revisit the 1990. How are we going to get there? Our CE has touched on build, that, yay, we've got something to celebrate, guys. Build is here. Of 0.2% of the grade 7 to 9 contractors, that's a value of 20 million and above. Yep, the projects, sorry, yeah. Grade 7 to 9 projects, value of above 20 million rand. 0.2% goes for development, for developmental purposes of contractors, especially the targeted groups, black, youth, and women. There's the D, Uncle Paul. Now, if we focus on Gauteng, what have we done as the CITB? We are implementing mentorship for CDP approved. CDP is standing for Contractor Development Programs that are aligned to the NCDP, the CITB's NCDP. So memoranda of agreements have been signed with the Tshwane Special Economic Zone and Khulile Metro. The TASES has enrolled or has a target of 250 contractors. Khulile is seeking to do or implement CMS's construction management system for grade 5 to 8 identified contractors in terms of developmental purposes under those CDP programs. That is going to run for the next 36 months, which is 3 years. Short learning programs, the institutions, there is a tender that is out, at least the director of Build is here. He can explain, you can engage him further, Nati, on what is happening pertaining to the tender. Also, we've aligned this, these two to speak to the grade 2 to 6s with institutions that will identify developmental needs for the identified contractors. And if I stand to be corrected, Nati, I think about 52 contractors have been identified in Gauteng. And also, we have implemented CMS training sessions since 2023, and we are seeking to focus on research and development where we can. This information, we are planning to actually incorporate it in the next contractor development publication because it's not yet there yet. Yes, I see the time, and I think I'll just run through these. In terms of how to get to the 90-90-90, as per CITB's transformation strategy, the business conditions will play a huge role to accelerate transformation. Ntando already spoken about how underspending affects the pace and depth of transformation. It's important that there is access to work, and there's also participation not only in the contracting sphere, but the value chain as well. Manufacturers, we need black manufacturers, we need black BEPs to be involved, and the like. Business factors as well, can't see this, I'm sorry, effective transformation, yeah. Enhancing, that's what the CMS and the products, CMS, the management systems and the like come into play. Good governance plays a huge role in project delivery. We saw what happened to the contractors that were involved in the 2010 stadia. If some good governance was applied there, I don't think that would have led to their demise, unfortunately. And lastly, my CE did mention commitment, the word commitment, and I marked it down. It's very important for all the stakeholders around here to commit to these elements in order to actually get or achieve the desired results in terms of transformation. Thank you, ladies and gentlemen.
Thank you so much, colleagues. We can just try to do a short Q&A in the interest of time, but I think Braish, Ntando, and Pumelele are here to respond to your questions. The mics can rove around, please.
Thank you very much. Zinalanga Ndicheni Gumura. My question is as follows. In terms of the ownership, when you say black ownership, are you speaking about black ownership in terms of the BEE Act or otherwise? Also, my follow-up question would be that how do you deal with the issue of fronting? Because it's one thing saying 51% women-owned, and the truth is that most of those people who are directors in those companies actually do not have an idea of what's happening in those companies that they have a larger percentage of. And then my second question speaks of the transformation approach. You spoke of something here about how we need to ensure good governance and strategy. I'm worried about the capacity. I'm thinking it's one thing trying to be, or speaking of the good that you need to do, but you have the capacity thereof. The reason why I'm asking that is also to speak to how, if you look at the Department of Labor and its inspectors and how labor laws are violated, they always speak, no, good governance, you need to do X, Y, Z. But do you have the capacity to can achieve that? Because it's one thing speaking about things that you want to achieve and equality pressing us. Thank you.
Okay, let's take all the rounds and then see, is there any other questions? And then the colleagues will round up on the floor. Going once, twice, okay, gone. Let's please give a response to the question, colleagues.
Thank you, colleague. In terms of ownership, the CIDB chooses to look at share ownership, shareholders, not necessarily, not the triple BEE sector codes like the professionals. So our perimeters run from greater than 50% upwards. In terms of fronting, I do have other colleagues that are here who can answer on my behalf of that. I do have Mr. Richard Rapiri. He's going to engage you on that. And governance, CE is here, so I will just only answer on that part.
Yes, in terms of definitions, as you've asked, as per the BA scorecard, which all the HDIs are included as part of that. And then fronting, the construction industry is really facing similar challenges to other industries. And what we try to do with the indirect targeting standard on the performance reporting thereof of that standard is that the participation, because for instance, if someone, you never see a director on a site meeting, the likelihood of fronting are very high. But I do think we still need better mechanisms of dealing with that. And I don't know really which industries that are doing better at it, in a sense that, which one? Tell me, it's a dialogue, Chief. In a sense that our businesses, you also employ a lot of people and all that, so sometimes it becomes easier to mask it. It's not like a lawyer where you know who you've briefed and you'll see them in court. But it's a dialogue, and we want to learn also from our stakeholders as to how, because it's a genuine question that a lot of stakeholders are concerned about. To saying, when we talk of this transformation, we talk of this contractor development program, is it genuine transformation that is happening in that? And then in terms of good governance, we as a CIDB can put up the frameworks, codes of conduct, disciplinaries, and the removal of contractors, those that contravene those. And also, but it also requires the industry to tell us when transgressions happen. And we really have a good record of following through those issues that are raised either through our hotlines or other means of raising some of those issues. So it's a collaborative effort where we together can ensure good governance in the construction. What is helping sometimes is this litigation that Ubaba Makanya is talking about. But it does have also unintended consequences that we're discussing earlier of late projects, because contractors now are not afraid to actually, especially the larger contractors, to stand up to say, but these were the rules that were laid out and this is how you intend to award or this. So we do need, we have now, unlike before, codes of conduct, inquiry panels that can also levy fees when people have transgressed the code of conduct or removals thereof, and removals that are also happening now. So good governance in the construction industry will also require the collaboration of all stakeholders. Online, there was a question that was raised about whether we've done studies relating to cancellations or work stoppages as a result of site invasions or disturbances on site. We have not quantified that per se, but it's also something we could consider. Well, it's something we can consider to inform the industry, because once we know the problem, it's much more easier to come up with solutions to that. I think, are you covered on the 3 questions, or you want to give me a good example of how others have dealt with fronting, or we'll take it offline? Offline, okay. I like when we engage with our stakeholders that will raise robust issues, but also will also provide solutions, because as a learning organization, most of our standards come from such interactions. I think that was the last question. Can I do the closing? Yes, please. Yeah. Oh, there was another question. Give me the question.
I'm sorry, Chair.
No, don't stress.
Don't disturb me, please, Richard. Just a few questions which actually I wanted to inquire about. Anyway, you spoke about the grading of the professional services, which actually I know that is still in the process of actually being promulgated. So, but when actually, my first question is that when are you thinking that this actual process will be completed? Because through my knowledge, we've been coming here trying to give inputs for the past 6 years, if I'm not mistaken. It's been long. So that's my first question, sir. And then my second question is, when you talk about the women-owned and also youth, so those actually, which I saw you are capitalizing more on 2 to 9 what about those millions of the grading ones, which I don't see here, where you are talking about you have partner with certain institutions in order to try to mentor those service providers and also short courses. So why they have been omitted? Because they are making more actually SMEs than actually the existing one. And my last question anyway is gonna be good governance. Yes, you are very correct, good governance, it must come from the institution. But you are aware at the end of the day that institution will never actually, let me just say official will never come to CIDB and inform them, because it's so dangerous, especially when we talk about from supply chain point of view. Also the project managers, they can't do that in this country today, unfortunately. So we are just in trouble. So I don't know how from your side as CIDB, but I had earlier on you said there's also an institution you're gonna actually, or you are busy preparing or establishing ombudsman or something of that nature, which is going to be, is it going to do the monitoring and then how are they going to do the monitoring? Are they gonna just only look on the system like currently what we are doing, or they're gonna go to the site and see those projects of whether they are executed accordingly? Thank you very much.
Those are all the questions, colleagues. Okay. Yeah, in terms of the registration of professional services providers, it's been a long debate for a number of years. And our view as a CIDB was that first, in order to, you see the statistics that have been shared here are also statistics that are coming from a voluntary association, which gives us a picture of what is happening within their membership, which is quite useful, but doesn't cover everything. So number one, for us to effectively monitor the industry, we need to also monitor the activities on that in terms of where the appointments are being done, are there any developmental initiatives, ownership patterns, and all those kinds of things as an industry as a whole. It's more on the developmental arm of the CIDB to also figure out, because when organizations, when clients enter into contracts with, they don't enter into contracts with individuals. They enter into contracts with firms. We need to understand what is happening there. Ownership patterns, development, who gets awarded projects and all of that. Because you will not ever have effective policy in that area without the information that should inform that. But it's a debate that has been going to and fro for actually much longer than it should have. We really should have concluded that it's part of the additions that have been put in the amendment bill that finished to consultation last year. I don't have a definite figure or timeline as to when it will, the minister has to decide on the consultation has been done. Are we moving on, or are we changing direction on that part? In terms of why, when we are talking about transformation, why we highlight grades 2 to 9, it's also just being overly transparent as a CIDB, because if we were to also include grade 1s, and we will be saying 90% of the industry is black owned, but a lot of the participation, as the colleagues, others have said, is also in the higher grades in terms of, not the number of projects, but the full real economic participation in terms of how much is being spent. So to not mask the statistics by having an overall figure, we have to highlight per grade. At grade 9, where are we? At grade 8, where are we? Because we can always say, colleagues, we are fully transformed, whereas we are talking about looking also at the grade 1s. In terms of grade 1s, the first thing that needs to happen also for their development, and we've updated the construction management guidelines, is also training in that. We are not leaving them out. Just training in what is a construction business, what is expected, pricing, basics of contracts, and all of those. That's the first intervention before you talk about construction management systems and other areas. So that really is our focus for grade 1s. So what we had to do first was to update our construction management guidelines, which served at EXCO actually yesterday, so that because there are changes in law, changes in compliance areas, VAT and others, so that becomes as a starting point. Understand the construction business, how do we operate, what are the legal obligations, compliance obligations, COIDA, all those kinds of things, so that people are better empowered to participate in the construction industry by understanding. Also, for development purposes, we don't have barriers of entry there. It's basically having a business, well, being able to register a entity. If you're a person in good standing in society and you can register with CIPC, you can register as a grade 1. But that does not fully empower you to participate meaningfully in the construction industry. And our main focus for our grade 1s is that. And then I've indicated that. The aspects about good governance, what we've done to also account for that, we also have outlined many of the cases that we investigate against contractors or clients will also come through this anonymous, is it anonymous? That thing, hotline, where you don't have to say who you are. Yeah, it's around, yeah. So where you don't have to say who you are. Because also Auditor General looks at all the infrastructure clients. We also influence their working papers on how they ought to audit for infrastructure, because they also have to give a view on governance for each and every infrastructure client that they audit. So we do some of it, we will do it ourselves for the cases that needs investigations and inquiry processes. And also you don't have to state who you are, just give us all the details. And then you get given a reference number to be able to follow up. And some people are actually quite good at that, also with the follow-ups. And then also we need to work with other institutions that are looking at that, like the Auditor General, when it comes to the ombuds that I referred to was mainly to look at disputes. And find quicker and cheaper ways for our contractors to assert their contractual rights, like issues of payment on time and issues of disputes during the tendering process, and then make it a responsibility of the client if they still want to further dispute. Let them spend the money to go to court. But the thing is now, right, it's really one-sided. If you are not paid on time, someone they'll just dispute your invoice with just frivolous things, and then the issues go on and on and on. Yeah, but we've not forgotten our grade 1s. They are also very important to us, and those are the interventions that we have for them. I think I've covered all the questions, colleagues, and I will... Someone is crying too. Yeah, and I will really thank all our colleagues and really for industry stakeholders and colleagues for the discussions that we've had today. Those are quite useful for us as we also do our job as a CIDB. We exist for the industry and the industry as a whole. Clients, contractors, manufacturers, PSPs, because that's what constitutes the construction industry. And being a regulator, we don't also have to please only one side of the industry. We have to do what is right for the development of the industry so that we can deliver better infrastructure more efficiently. A lot of jobs are dependent on the construction industry that is thriving. Our infrastructure backlogs as a country are dependent on an infrastructure, on the construction industry that is efficient and effective. And it is through these types of dialogues that we commit ourselves and we can be, colleagues can also follow up with us as to how far we are with the proposals that are being made. So I really thank each and every one of you and also the colleagues that have joined us online for the robust discussions, and also thank our other stakeholders that have also provided the economic outlook for the construction industry. And we can only do better if we work together. I thank you all.
Colleagues, please do not run off. Can we just organize